video check in. Good to go. All right, gang, you have the notes. I did send them out. Good to see everyone. All right, great to see everyone. Okay, happy Thursday. Audio and videos. Okay, excellent. Sometimes when I switch over from the show, it can be a little tricky, but nope, we're good to go. Excellent. All right, let's get to it. We have, I think the last question we had before we wrapped the show is what kind of gap situation do we have this morning? And we have kind of a vanilla gap today, all right? Just a vanilla. What do I mean by vanilla? Well, this gap is not exceeding the previous session high or low of the session. It's not exceeding that. We're inside. I mean, really, this is actually an inside candle today. The current candle, this daily candle, is inside the previous session high-low. So a little bit of potentially a pause candle. The market clearly isn't pushing at the ceiling. It's just sitting near the floor. And you might wonder, why that is. And one of the reasons that is, I think, is because we have a stacked calendar today. We have Waller already 9:10 a.m., Evans 9:50 a.m., and Bostic at 11. So we have 3 FOMC members speaking. Now, you might say, Rog, does it matter? And do all of these members matter equally? And frankly, they don't. Okay, I always prioritize the voting members over the non-voting members. So that means that Bostic, while he could move the market down in here, not as important, right? Just not as important. Waller, I believe, where is Waller? There it is. Waller, yes, right? So Bostic, not important. Waller, what about Evans? All right, is Evans someone we need to keep an eye on? No, right? So this is where, they can move the market, but not equally, okay? So that's something to keep in mind. And then it's really important to know if they're neutral or dovish or generally hawkish, because a hawk, someone who favors higher rates, speaking about favoring higher rates, is not really a needle mover, right? But a dove speaking hawkishly or a hawk speaking dovishly can be a shock to the system, and it would require the market to sort of realign to this sort of new information, meaning this particular member who usually has a certain kind of opinion has a different one. Makes it really easy. Now, one of the things I mentioned to myself and members is, look, we don't need to listen to what they're saying. Most of the time, it's hard to believe that it's even English they're speaking because it's almost indecipherable what they're trying to say to the market. And the truth of the matter is they're trying not to say anything, really, usually, because they don't want to paint themselves into a corner. So there's going to be a lot of ambiguity to what they're saying. What we want to do is just pay attention to price. What is price doing as they're speaking? Right? So that's super, super important in terms of the way in which we process what is happening with these members. All right, so let's get over to our TOS platform. There we go. Let's go over to Thinkorswim here. Okay. And what we're going to take a look at is our triple layout here, which is going to allow us to see where our previous session close, and here we go, where our previous session closed and our previous session high-low is at. So I'm going to move this over. There we go. And I just want to see today, really all we need to see on the daily candle is today's candle, today's current candle, and yesterday's candle. That's really all we need to see. So I'm going to go ahead and get that lined up here. All I need is really today and yesterday. That's it. And let's see, let's get it shoved over to the hard right edge. All right, there we go. So that's all I really need. That's all I really want. And what we want to know is where was yesterday's high-low close, and where are we today in relation to it? So I mean, just scrunch it up and shove it on over to the right there. That's all you need. What are the key levels on this chart? Well, if we're going to have bearish sentiment, we can see here we're going to get a very slight, but I think rather meaningless gap this morning. Very slight, but likely pretty meaningless gap. I say meaningless because ultimately what we have is, like I said, an inside candle. And I would say the sentiment is mostly bearish. But if we were to take out yesterday's low, right? Not just yesterday's low, but even before that, if we were to take out, meaning after 9:30, even yesterday's close, watch how quickly we start to see a lot more bearish momentum, bearish sentiment. We'll see a lot more shorts start to make their way into the market at that point. The other thing that I want to make sure, and I don't know that it's running right now. Okay, I want to make sure my HPMRs are on. Okay, cool. I do believe they are. I think so. Oh, there they are. Cool. All right. Okay, so we're all set. We're all set. So what do I have? I have a 2-minute time frame that's going to help me dissect what's happening inside the 5. And I have a daily to help me understand what the overall sentiment of the day is. Okay. Now, the notes that I've sent you all already give you an idea of what our hot zones are today. Some general questions like where are the indices in relation to their 200 EMA? That's probably not a major one for our day trading today. But this one is, where is open in relation to the previous session close? That's what we just did on the daily time frame. Okay. Between 9:30 and 10 a.m., this is what we call the clearing period. And within the clearing period, we have the clearing range, right? So I would call this mostly suitable for more advanced aggressive traders. Okay. And it's something that I think watch at least a handful of times before you start engaging the clearing, before you start engaging this first 30 minutes of the day. I think for most traders, you're going to be better off waiting for the clearing period to finish. That means your first day trade will happen sometime after 10 a.m. Now, in the meanwhile, if you say, right, I'm cool with trading the first 30 minutes, thanks for the warning, I'll trade smaller size, I'll look for more conservative levels. 2 things that I would tell you to keep an eye during the clearing period. I mean, it's the same thing that I'll tell you after 10 a.m. is first of all, are we taking out the previous session close? There will be momentum that will trigger as we do that. If we trade through, say, basically 450, we start trading through 40-50, watch how quickly the sentiment in the S&P goes quite bearish. What is that level on the NAS? All right, so let's zoom in. That level on the NAS is sitting at here, right? There's our previous two candles. That level is sitting at around, actually, we're not that far from it. We're not that far from it at all. That level is sitting at around 14, well, keep an eye on 14,460 to 14,450, right? So about 450 points south of where we are right now. So if we start running through 14.5, we'll get a little bit of momentum, bearish momentum. And then we run through 14,460, 14,450. When I say run through, I mean trade lower through. Watch how quickly the NAS starts to accelerate to the downside, which would suit me just fine because we're bearish the NAS, right? We're bearish really any stock, any sector, any index that's at or south of that 200 propulsion, the 200 exponential moving average. Do I want to buy the NAS? I really don't. I really prefer not to. But if that seems to be, if a long position seems to be the first one we're going to get, let me mention something. Between 14.5 and between 14,450, 460, before that floor gives, before that floor breaks, if it even does, it's a floor. It's support. So the closer we are to that, the more likely we can expect a little bit of support, bids, buyers up. If that level is broken, they'll back off, and that's where the bears, sellers, take over. All right. So that is what we have right now going on in the NAS. So, and again, an S&P NAS, where's the previous session? Where's the previous session close? And where are we in relation to that? Okay, same thing with the Dow. We're really close to the Dow. So again, the first trade oftentimes is going to be an oversold buy that accompanies the low. So right around 34,250 in the Dow and YM. All right. We'll probably see a bid there. And if that bid doesn't hold, if the buyers aren't willing to support that level, because remember, bids, buyers, that's support. What actually organizes, manifests into support on our charts? The bidders, the buyers. So if they don't show up, it's I won't call it a tug of war because you're not necessarily pulling. It's more like a push of war. They're pushing against the level. And if the bears are pushing lower and the bulls are pushing higher and the bulls don't show up, well, there's just no resistance for sellers to have to worry about. My feeling is, again, if I'm looking at, I shouldn't even say feeling, that's such a dumb thing to say for trading. My opinion, based on what we're looking at, is I'd rather be short these markets. I'd far rather be short with the trajectory of the Federal Reserve. By the way, we've talked about this in the premium video. We have been long gold. This is not a new position. We're not Momo chasers here. Although, hey, I'm glad they showed up because they're probably helping our position higher, right? We've been long gold. We've been setting this trade up since the 15th and the 16th of this month. Chopped around for about 1, 2, 3, 4, 5 days. No worries. Finally getting our follow through. Awesome. Hey, look, I'm happy for Momo folks. Good for them. But we've been long from lower. We're getting that nice follow through to the upside. Beautiful. So if you've been in this trade, I think today would be a great day at very least to move your stop to break even, or likely even scale out of half your position at this point as we're crossing through 1950. All right. So again, I am not in the least bit bullish these equity markets. But at the same time, I talked about this in the Charts and Comps show. I really kind of don't care either. I don't want to have to be worried about getting clarity from markets that really don't feel like giving us a whole heck of a lot of clarity when we have terrific clarity in a lot of other places, right? So, we've loved this long copper trade. If you recall from the premium video, I said, hey, let's take advantage of this with a long Freeport McMoran position. This thing is on fire today, and it has been since we got long. And again, let's go back to, are we getting along with the momentum? Gang, I am not a momentum trader. I even call them FOMO, MOMO, bozos. We don't do that. We wait for something that we already like, an uptrend, to correct, goes on sale. That's where we engage it, and then you can see what we've been doing ever since. And big thanks, big kudos to Mr. David Starr, who I kind of had not been paying attention to copper, and he's been on the copper narrative. I'm just doing it through Freeport McMoran mostly, but he's been on the copper narrative, I'd say, for the better part of the last 6 weeks at least. So big kudos to him. It put this particular market back on my radar, and it's been a fantastic trade for us ever since. All right, I also want to remind everybody, in terms of some of these longer term positions, yes, it's so easy to get sucked up into day trading, which is fine. But there are a lot of great trends I don't want you to miss out on, because these don't require as much babysitting. They don't require you to watch these, but maybe a couple times a day. And that is our short position in the 6E that we took in this double red downtrend, bounced into the wave, Yahtzee. That's our opportunity. And we're getting some pretty nice follow through. If we take out the 110 handle, I think we start to see 108, 109 at least on the way down. This is a direct play on being bullish the dollar. The easiest way, the cleanest way to be long dollars is not the US dollar basket. And it's not UUP, it's not DX futures. It's to short 6E. All right. So those are just some longer term setups, but I hope that we've been outlining. The premium videos are a fantastic way to keep up with what I'm doing on the longer term, position or swing trade side of my trading life. All right. So now we've got that covered. Let's head on back on over to our day trading conversation. And again, where are we in terms of the previous session closed, which is sort of flirting with it. Again, I have to be mildly bullish at the moment. Let's get down to here we go. So 940, I'm jumping down to the bottom of those notes. So scroll on down, everyone, through those notes, past those videos. At 940, I am ever so slightly bullish in sentiment, since the indices are above the Wednesday closed. If we can test that, that's a potential buy. If we break it, sentiment shifts, and we're going to see momentum south of that level. All right. Okay. I will also say that all four, well, I don't know about four because I'm not actually looking at the RTY, but all three indices, yes, and Q, and I'm going to major indices. I don't actually think of the Russell as a major index. It is an index, just not a major one to me. All three of the major indices are neutral, and that's your JT. That's your JT tools, right? JT trade flags, and then for those of you that have the JT multi-trend, cool. You'll see it's a yellow neutral trend. That's where it does validate potentially that long position, but it also validates potentially a short position from the higher highs, from the resistance, if we get up there from the ceiling. All right. In terms of sentiment, you might ask, Rog, is there anything else aside, in addition to, to the previous session closed, is there anything else to look at for sentiment, right? Look, I'm a forex trader. I'm a currency trader for, at this point, currencies I've been trading for a long, long time, currency futures, and I love forex. So currencies are the biggest market in the world. There's not even a close second, right? And there's a lot you can glean from currencies. And one of the things that you can glean from currencies is just sort of risk appetite. And you look at the one relative performance. Now this can change a lot, but there's a little bit of risk appetite. So and the two currencies that I'm focused in on are the weakness in the yen right here and the strength in the COMDOLs. That right now at 9:43, it's so early in the morning, but is minorly risk appetite. But remember, we're getting a very slight gap up, right? So it's not surprising. We'll take another read at this closer to 10. What we're looking to see is the yen moving this way, or the Aussie and the Canadian dollar moving that way? Because that would be a shift in the current sentiment. Okay, that's another thing that I'll use. I will look at the Aussie and JPY, the yen, on a one-day relative performance here. Okay. Another thing you can look at. Those are two really easy reads. When I say easy, it's very objective. You know, it either is above or below. It's either to the left or to the right. So they're really two very objective ways to do that. Okay, back on over to, there we go. Getting a little bit of strength here. Again, as long as we're above that close, it makes sense. And you might say, Rob, what can we do with this price action? My V-score traders will notice that we have a V-score NQ that fired off at 9:35. That's aggro, and there was not an HPMR in sight. Would that be a trade that I would take? Not really. Not really. What I'm looking for those of you that have this particular premium tool, is I'd prefer to see this happen in conjunction with this, right? So now we're getting this, the upper end of the V-score tool. V-score is telling us where the low and high edges of the range are sitting. That's what it's trying to identify for us. I would far prefer that red happen up in here, right? So what I'm getting is one tool saying, Rod, we've reached the edge. You can buy or you can sell. But what I like to see is at least two tools in agreement. This is just stacking our tools. This is a volume-based tool at a time where volume and volatility are probably the better ways to measure the market. So yes, if you're aggressive and comfortable with your V-score reads, there was your first buy. This is your first target, and maybe even your first short. Why would I not consider that great for us here in the room? Again, it's just that one tool telling us that we've reached the higher and lower end. But, in fairness, gosh, look at the NASDAQ sell off. It's done a pretty admirable job of identifying, hasn't it? So that's one of the cool things about the V-score. It doesn't need price to agree. It's really measuring what's happening based on volume. All right, let's jump on over to the S&P. I do want to take a look at gold and crude intraday as well. Obviously gold is heading higher. It hit our daily target today, which is nice. Okay, so I'm looking at SE here. All right. kind of the same problem. I say problem, but kind of the same issue that I had with the NAS. Low, there's my V-score aggressive yellow signal, but nothing else, no HPMR, nothing else really helping out. So that makes a very aggressive time of the day, right, where I'd rather see things more surely confirmed. It's a very aggressive time of the day, overlapping with a very aggressive approach, which is really not my cup of tea necessarily. Dow. Let's take a look at the Dow. So Dow, this right here, this is our slow stochastic. Right? Ever seen the slow stochastic on my screen before? For whatever reason, that's what's sitting at the bottom of this screen. Actually, you can see the big old title above it. 21K 3D slow stochastic with the signal errors that are built into TOS turned on. All right. And that's actually reaching an oversold level in a neutral market. Gang, this is really important. If you're ever going to use something like a slow stochastic, you have to use it in a neutral market. You do not use a slow stochastic in a trend, right? You want a market that's moving like this with an indicator that tells you when we've reached a low or a high. So it's very important to identify that a market is neutral and then to, okay, what are my neutral market, sideways market tools? Slow stochastic is a great one. Ready, aim, fire is a great one for those of you that have that. Right? If you don't, and you want to venture into fading overbought and oversold levels, these highs and lows, put the slow stochastic on your screen. These are the two choppy market tools, actually the only two choppy market tools that I would recommend. Okay, next up is, I want to take a look at crude and gold. So neutral market, stochastics are valid, but again, stochastics are hanging out. They're all by themselves. Is there anything else that's in agreement? Well, actually, take a look over here at the 2-minute chart. HPMR. That, one reason, second reason, and actually we have a third reason. We've got a yellow V-score low. V-score, HPMR, and a slow stow. Awesome. So what is that? What is this green zone here identifying? This is a volatility zone. Time and volatility, actually. The time and volatility based zone, which is indicating where there is support right now. That is indicating support, and as is the V-score. Gang, remember, no matter what you are putting on your chart, at the end of the day, the only reason you're putting anything on the chart at all is because you expect it to reveal support or resistance, and that you expect that level to have a reaction. That's it. That's it. So then the other thing I want to make sure that we do here on crude is it okay to buy? Do we like the idea of a long? It's going to be a little tricky because we are just below yesterday's close. We are just below the range. One second here. All right, so if we're able to take out about 114.20, look for the bullish momentum to really get going. Now you might say, Rob, does that actually render this invalid. No, it's just that we know we're fighting the fact that we're south of that level. All right, we're south of that level. What else? So it's not the movement higher would be crisper, would probably have more bullish follow through if we were above the close where more bulls are ready to buy. There's generally a more bullish outlook sentiment if and when we get above that. All right. Hope that makes sense. All right. Okay, let's see. What else we have going on? Let's take a look at ZN. Now, ZN is a market that I want not only exposure short in if we get a rip higher, but I'm open to day trading it too. Now, ZN is cool because we can trade ZN futures and we can trade the IEF ETF. So traders out there who think, okay, Rob, this is all kind of cool, but I like to day trade options. No worries. I mean, for the S&P, you have SPY, SPX. For the NASDAQ, you have QQQ, NDX. For ZN, you have IEF. So there's a lot of ways that you can choose your own adventure in the futures market, meaning you don't have to trade the micros or minis. You can trade the alternative ETFs as well. Right? Again, bear with me one moment. I got to get some water. I've clearly over caffeinated this morning. Give me 30 seconds. I'll be right back. All right. Thanks for that, gang. All right. So back to the 10-year. We can day trade the 30-year as well. And that would be via ZB or TLT. And really, none of them are catching my eye in a major way yet. If you're wondering, does that upper end of the slow stochastic and that red arrow up there, does that set up a short? Again, please remember, you really want to have two reasons why something would be valid. Although I like the short on ZN as well. We're clearly below the previous session close. So that's terrific. Let's go revisit the CL because I really want to show you the challenge of buying something when we're below the previous session close. See how crude's having a really tough time getting going? there's still there's still a certain overwhelming, clearly, bearish sentiment here. While I think the buys could do well eventually, finding the floor that is buyable is going to be far trickier when we have conflict between, oh, this is a buy, but the sentiment is still bearish. Got that? So look, I think that at the end of the day, some of you might say, but Rob, we bounced up pretty nicely. That's fine. But when I put on a day trade, I want more flow through than this. I really don't like to scalp. I really like to wait for maybe 2, 3, 4 on a really great day, maybe, right? Some really high quality, multiple written buys or shorts, and then act. And until I get that, I won't do anything, which is in many ways tends to fly in the face of what most people think day trading of any sort is. Day trading is not just scalping. Day trading is not trading in both directions. Day trading does not even necessarily imply a certain amount of activity or even hyperactivity, although a lot of folks like it. And clearly there is a nice little dopamine effect to that. But please know, the best day traders that I have personally, except for one exception that I know, the best day traders that I know are not super active day traders. They're waiting, they pick their spot, and they get in. John talks about this story. I put the story in the notes. The garden lady, excellent story. I know of one very active day trader. I guess he's got a chapter in a Market Wizards book. And that's the only guy I know that puts on 60, 70, 80 round trips and that hyperactive style. Other than that, you're going to find most traders, it's going to churn your account. Your broker will love you and probably send you cool gifts come Christmas time, but your account probably won't. All right. It's very easy to overtrade when you're a day trader. And in this video that I put in the notes, which is a story, one of my favorite stories that John tells, talks about things that most day traders do cause them to be, generally speaking, losing traders. Okay, so check that out. All right, so back on over to the ES. And yeah, really choppy. And I don't have a great edge yet. Again, sentiment-wise, we'd have to focus on the long side. So if we can get down to the lower end of the range, V-score, which we'd hit once already, slow stow, got very close to that, right? There's a slight edge to the long side as long as we are above yesterday's close, all right? So I keep an eye on that one. All right, let me tackle some questions. Let's see here. Hey, Jeff, I don't know the context of the question you're asking. Will they wait until May for another rate hike? Oh, will they wait? Yeah. I mean, I don't see why there would be. Look, I remember there was an environment of surprise rate hikes during the Greenspan era. I can tell you that most central bankers do that, although Greenspan has to be categorically really singled out in a very, in a space all his own for being the worst central banker in the history of central bankers ever. The issues that we're dealing with now are really reverberations from his tenure. I don't know how history looks at him as anything other than probably the worst central banker ever. So other than him, who he would have these surprise hikes or cuts, I don't see Powell doing that. No, I don't see Powell doing that. So yes, I very much would expect they'll have a very, I would think, consistent message of hawkishness until that May meeting, where we'll see a quarter, if not maybe a half-point hike. Yeah. I'd keep an eye on that. All right, see what else we have here. The Garden Lady link does not work. There it is. Nope, it's working. Just click on it. It's working. All right. The green and red zones, those are called HPMR, the hourly price movement ranges. We have the ones for the indices, and I think maybe gold and crude in the room drive for Thinkorswim. Okay. Let's see what else we have here. And I would definitely watch that video. It's a really good one. It's a really good video. It's probably one of my favorite stories that John tells about, how overactive trading is really, for most traders, going to be a detriment. Now, there's always exceptions, of course, right? But for most traders starting out, an overactive two-way style is not going to serve you. I think some traders will evolve to a disciplined, active approach, but most traders don't start there, gang. Believe me. All right, so let's see. So I still believe we're probably poised for more strength, at least in the near term. So since it's 10:03, after 10 a.m., we can look for breaches, which, again, I won't be surprised if we get bullish ones, because, again, we're still above the previous session close. If we see breaches through the highs, we're seeing that right now. Through the highs, setting up breach, retreat. Retreat buys. All right. Now, if we continue to move higher, really the first level of resistance we're going to have to contend with will be the previous session open, and that'll be accompanying the 4,500 level on the ES. And right around 14,660. So way up there, 130 points north of where we are on the NASDAQ. So bullish sentiment. Again, the idea is get that HPMR and D score, just get some sort of stacked level, and then see if you can work with the current sentiment of the market, which, again, we saw weak yen, strong Aussie, strong Canadian dollar, etc. All right. So this is automated, which is what makes this so easy. And if you go up into the room drive here in the futures room, you'll see the FMB clearing range tool. And what that FMB is going to do is automate this whole process. It's already automatically watching from 9:30 to 10. It's already automatically identifying the high and the low of the range. Okay. And then it's automatically going to let you know when we break through one of those two barriers, one of those two levels. That's what we call the breach. Okay. So I don't want to get long here. A lot of folks ask, Rob, do you get long here? I don't, because that would be a momentum trade. I do not do that. But this validates, right? While I do not take a momentum trade, this does validate a long position. That long position is going to be valid inside the retreat zone. The retreat zone is a Fibonacci-based zone. Okay? Now, the main issue I have with the morning so far, and a lot of you probably already noticed this, is the range is kind of narrow. It doesn't invalidate the breach retreat, but what it does do is it gets me a little concerned about whether or not we have, oh, I gotta relog in. Okay. Whether or not we could see another sudden expansion of volatility, because the clearing range, the 9 to 10 and the 9 to 10 o'clock hour were so darn narrow. And when I say narrow, I'm talking historical volatility. The clearing range ideally in the NASDAQ should have been about another 17.5 points larger to satisfy the typical range we see for this time of the morning. 100 is basically a lower end. We had, 82.5. It's a little bit narrower. So just presume at a minimum, we could see another 18 points sort of quickly expand to sort of meet even that minimum historical volatility. Doesn't mean it will, but we want to be at least braced for that. Okay. So breach retreat has triggered on the NAS, NQ, ES, and YM has seen a breach through the highs. And now we wait for a retreat buy. So the retreat buy basically is valid the moment we enter the shaded in area that automatically highlights within that FMB clearing range tool. This zone is the 38.2, 50%, and 618 of the high to low of the clearing range. So again, there's nothing magical about this other than the magic of Fibonacci. Okay. Do I like the long? Generally speaking, I don't. I'm pretty bearish indices, but we trade what we see, not what we feel, and really not what we think. We trade what we see. What are all my tools telling me? We're still in bullish sentiment. We've now breached, and we're getting a retreat. Okay. Which is kind of cool because it's happening so close to 14,500, which is a major psychological level, and it should have some support of its own, which is cool, which is great, which is helpful. Okay. Breach on the ES. Again, your zone is way down here. Is the ES a narrow zone today, like the NQ? Well, let's go take a look. So in the ES, if you just saw, we have a range of 16 points. I would need at least 20. So yeah, we have a narrow range on the S&P as well. We have a narrow range there as well. All right. So I'd like to see the pullback. Now, what if we don't get the pullback, right? That's a great question. What if we don't get the pullback? Would you cancel the limit order? After 10:30, because you never know if we're going to get a wick or some quick move down there. So after 10:30, I probably will. All right. After 10:30, I probably would. I would recommend, yeah, likely that scenario. But, I don't have a problem with leaving that order out there. I really don't. I really don't have a problem with that. So if we just take off from here, frustrating. It is frustrating. The only other thing that we can do, and this is what the S&P is doing right now, is, okay, so we have this retreat zone, right, which is in here. We also have a retest. It's not a zone as it is a singular level. So the previous high, once we get a breach, getting back down to that previous high, what was once resistance, right, becomes support. Once resistance becomes support. And then this would just simply be what's known as a retreat level down here. This is the retest area. really aggressive, but sometimes that's all we may get. So what I would recommend, if you are even contemplating a retest entry, do it with SPY calls or do it with the MES micro S&P. SPX is fine too. I just don't do SPX NDX. But look, however you like to do that, that would be, and also smaller position size. Also smaller position size. Okay, next up is, oh, Dow. Yeah, we have something similar on the Dow. Same idea. Reach through the high. If we come back down to that value area high, see, this is kind of interesting because we have a value area high as well as the clearing range high at our retest level as opposed to our retreat. So 2 levels. This is always going to be aggro compared to this level down in here. But we know our direction. Our direction is to the long side. And, as long as we continue above, take a look. As long as we're well above the previous session closed, we're still in sort of the bullish sentiment side of it. All right, which is, really what the struggle is with the crude oil market. It was a buy with crude below the previous session closed, and you'll see the probability does drop for the trade based on that positioning. Like any good filter, filters don't add to anything, right? What does a filter do? Think of a water filter. What does it do? It's taking out, it's removing. Any good filter in your trading process is going to remove certain trades, certain symbols, certain setups from consideration, not add them in. If after your analysis of the market, you have more things to do, not less, go through the movie one more time, right? Go through the movie one more time and then, go through the movie. Sorry, go through the, I was reading a comment in the other room. Go through the process one more time and make sure you're whittling away at that list. Your analysis should naturally be a whittling away process. Your analysis should naturally give you fewer things to do, fewer but better, as opposed to more but lower probability. Okay, so if you end up with that, just go through the process again until you get that whittling down process. So in a lot of ways, crude oil would be eliminated by that, is it above or below the previous session close question? And that's what that question is designed to do. Eliminate. All right? Eliminate. Okay. Next up is, again, if we just sort of run away, frustrating, yes, frustrating, but let me do this. Let's jump on over to the trading view charts. I'm going to push this to 7 a.m. on a 5-minute time frame. And so we have our trading view charts. Take a look at the NASDAQ, gang. Real interesting look at what we're dealing with right now. This line right here is the point of control. Right? That's the most volume we've seen since roughly 7 a.m. Right? Look at how the thick of the volume is just in this area. Right? basically here. What about here? So most of it's through here. And it does seem the market's having a difficult time getting too far away from it. But I will say that if you're looking for slightly more advanced levels, when price action is above a layer of volume, I call these volume ledges, right? Because if you look at this and think about scaling this, I think of Alex Held scaling this. There's Alex. And he's going to scale this, right? He's going to use these has to, right? To scale this and keep moving higher. Well, so does price, right? So does price. It's not that different. So if and when we can see pullbacks to either our retraced Fibonacci zone or even into our volume zone, and if they're really close to one another, even better, right? That is what we're looking for. So we're actually getting our retrace right now. I also want to remind everybody, though, let's go back on over to the calendar, because we're probably going to see moves like this, because who's next? Who's next? I have the hot zones in the notes. The notes are in the alert section, by the way, if you're in the futures room. I send those out. You just have to scroll. The notes are always sent out as an alert when we start off our session. So you'll notice there, Evans at 950. Now, this doesn't mean this is when they're coming out. A lot of times they're late. So Evans at 950. I'm not seeing a lot. I think Evans is hitting the market right now. If you're wondering what's affecting the market, I'd have to say, based on the hot zones, based on the calendar, it is Evans. FOMC, Evans. And I'd say this is it. And what I'm seeing right now is, here you go. This came out just a few moments ago. He's open. This is why hot zones matter, especially to day traders. He's open to that half-point hike. You think equities are going to like that? You think stonks are going to like that? Not even a little bit. Not even a little bit. So we are in the zone, though, by the way. We are getting a retreat at the moment. So let's get that in the notes. Okay, so what time is it? 10:19. Thanks to FOMC Evans, who is apparently a fan of a half-point hike. Okay. We are seeing a dramatic pullback into the retreat by zone for the YM hasn't budged. Is that? I'm going to double check that. YM did not budge? No, YM did not budge. But we are seeing it for the S&P. We are seeing it for the S&P. Now, if we get hawkish sound bites, commentary, whatever you want to call this stuff coming out of Evans, do not rush into the NQ. It is far more sensitive to rate hawkish commentary, to rate increasing commentary. All right, it's far more sensitive. So ES is fine. Now ES is going to be affected by the NQ because it shares so much weighting in common. But oh wow, look at the NQ. Well, there you go. That's why we don't even consider that, especially with a pullback coming with this. But look at the Dow. Dow didn't even flinch. Dow did not even flinch. So those more aggressive levels on the Dow, by the way, if you're looking for a slightly more aggressive level on the Dow, that's what it looks like. Take a look at the volume ledge. There's your volume ledge. There's your point of control. You all know that I like to anchor, maybe you don't know. The V-score tool that I developed is anchored to 7 a.m. I like to look at volume from 7 a.m. forward. It's as my mentor used to say, it's the first cup of coffee, although he didn't say coffee. He said it's the first cup of coffee on Wall Street, right? We start to see volatility tick up. We start to see volume tick up. So I've always liked to anchor my volume tools to 7, right? So you'll see, even when I'm using the visible range volume profile, let's anchor it to that coffee time, 7 a.m. All right, there's your volume ledge right there. A little bit more aggressive, but for those of you that are submarket sonar fans, you know volume is very powerful. Volume is exceedingly powerful for us. And it's not uncommon that you're going to see some of the 9:30 or even 7 a.m. anchored VWAPs in play, right? 9:30 or 7 a.m. anchored VWAPs are oftentimes going to be in play in there as well. So again, we got Evans moving the market right now. Remember, we have Bostic coming up later on. But we're gonna likely see a quarter point hike. Look, unless CPI and PCE and crude oil and grain prices continue to march up significantly higher by the time we get to the May 4 meeting, do not expect a half-point hike. It'll be part of the conversation, but we'll very likely see a quarter-point hike. That's baked in. That's going to happen. You know, we've been talking a lot here in the room that any discussion of a hold was misguided at best, completely clueless at worst, and was never part of the conversation. So if anyone starts talking about rates and they talk about Ukraine, put some cotton ball in your ears. They don't know what they're talking about. Be very careful. You'll hear most of that conversation on financial media, television. But don't entertain this, hold because of Ukraine. Ukraine exacerbates the issue that the FOMC has, right? That's the irony of that logic. Okay. So maybe we get a retest on $70. Okay. Really good relative performance there. Remember, the ES is already triggered. So ES, wrong from retreat zone. YM, aggro, buy zone is 30. I like this 385 level to 34, 370. But it is aggro. It's really more of a retest buy zone, okay? As opposed to ES being more of a retreat buy zone. And by volume, it's not just the volume ledge, but also the point of control. By the way, those of you in the futures room, you see that Neil shares a number of really powerful levels that he observes, calculates every morning, and you'll see there everything from points of control to I'm trying to remember what else he has there. He has previous highs and bull targets and overnight highs and overnight points of control and things like that. So check that out. Check that out. And, you know, I do something similar, but I do it a little bit more as the market is developing, but it's the same idea. What do levels, especially levels that are associated with higher volume, tell us about where support and resistance is. That's what I call submarket sonar, right? We have the surface, which is price, but below price is volume, just below the market, below the surface. Okay. Okay, so that is that. And it's just in the alert section. Okay. All right. And it just tagged. Just this is where I place those limit orders. That's why I give you all the prices. So I am tag, you're it. Now, when we get that aggro zone, I will only enter with about 1/4 to 1/3 of my usual size, because that's one of the easiest ways to control risk, gang, is just reduce your size. Most traders want to move their stops around or hedge or do other things, right? I will never hedge, gang. The only hedges in my life are in my lawn. So what we want to do is think about the overall risk of the trade. And for me, that's basically at least to this level or to the low of the clearing range. That's a lot of points, gang, but 150 points at $5 a point. So I like the long position. Now, somebody might say, Rod, what are our alternatives? I wish DIA was a little bit more liquid, an ETF. It's usually very spotty in terms of open interest. Of course, we have our micro, right? Micro is a great way to get exposure from an aggro zone, for sure. Okay. So we have alternatives. It's just usually I will recommend at aggro areas, micros, or SPY, QQQ. All right. So we have Dow and S&P. And my biggest problem with the S&P, let me just outline I love this Dow trigger. And again, small, very small position sizing. The issue with ES will be, where does NQ get support? Because the ES is always in a tug of war between the S&P, between the NASDAQ and the Dow. It's always in a tug of war. If the NASDAQ continues lower, it's going to tug at that ES. If the Dow can hold its own, it's going to help slow down the weakness in the ES. But when NASDAQ is weak, it is going to cause the S&P also to be weak. I still like the S&P over the NAS. And frankly, the NASDAQ is actually getting its first buy setup of the morning. So let me show you what that looks like. Well, I shouldn't say first. I think it's the second buy setup of the morning. Let me show you what you have on the NAS. Because whether you want to trade the NAS or not, it will affect the ES. Okay. So it's just below. Oh, wow. The NAS is in a very tricky spot. NAS is trying to go negative. So we're going to see the battle right now in that 14,460 to 14,450 area, gang. We are right at, the NAS is right at that line in the sand for sentiment. What time is it? 10:31. Okay. But let me show you what the NASDAQ setup is. So NQ is right at the sentiment line in the sand. As it is oversold on the slow stow, 5-minute slow stow, as we have a green V-score buy signal. and the HPMR support. I'm going to show this to you right now. Here's your HPMR support. 14,435 to 14,40. 1.5. Let's call it 14 even. 14,4 even. Okay. That is a zone of support, gang, and that we're right there at the line of the sand. I would expect the buyers to show up. And then this should actually catapult. Should catapult our ES. Okay, so let's go take a look at our ES. It should catapult our. By the way, is the YM going to move higher too? Yeah, because a number 2 weighted sector weightings matter, gang, more than ever. The number 2 weighted sector in the Dow, industrial, nope. Tech. The Dow Industrial Average might as well be called the Dow Financials and Tech Average. And yes, Charles Dow is face palming somewhere. What happened by average? Okay. NASDAQ matters. XLK matters. Let's take a look at XLK. Wowza. There you go. That's Apple and Microsoft, by the way. Those of you that are curious, okay, what's in that? What is in this concoction? And take a look. This thing's above the previous session open. Yowza. Take a look at XLK. This is going to help our S&P 100% XLK. Watching XLK for YM and ES is a great hack. Okay, of understanding sector influence. Y'all know how much I love sectors. Okay, so let's scale out. ES T1 44.73 We're above that right now. YM 34.437. T1 34.437. By the way, I'm not picking those numbers out of nowhere. I think a lot of you that have the V profile and see the value area high, there's that red line. That's their value area high. And that is, and actually clearing range high or value area high, whichever comes first, that is our T1. Clearing range high or value area high, whichever comes first. And there you go. Now, you might say, Rob, we're well above the clearing range high in the Dow. Right, so it's value area high. Okay? These are both value area highs. Value area. So, yeah, I pushed a little bit. Yes, it really should have been the clearing range high, but whatever. Here you go. Scale out. Scale out of half the position at T1. I don't have that many. I don't have that many of Dow. I have a decent amount of ES because we sunk all the way down into that retreat zone. Let me show you. So Dow, I have very few. I do not have a big Dow position. And this is a great time to remind everybody. Gang, I talk about the ETF alternatives. I talk about the micros because minis are not small account friendly. Just because you can trade a mini for $500 doesn't make the per point value any less damaging, especially if you're scaling in with 2, 3, 4, 5 contracts. If you're trading a small account and you're trading that many minis, look, put a little X on your calendar because you will blow your account out. It's too much leverage. It's too much size. Use the micros. They're awesome for a small account. Day trade the options. of the futures. I'm going to do more futures options trading because again, so many of the initial margins that we deal with as modern day futures traders are ridiculous. I remember trading corn for $405 initial margin, cocoa for even, I think, 500, sometimes even less than that, right? Initial margins are very cost prohibitive, especially if you want to scale in. Day trading margin is great, but it doesn't reduce the risk of the per point exposure. Please remember that. All right. So anyway, that's why options are great. That's why micros are fabulous. By the way, why are micros popping up? And why are they getting popular? Because the initial margin rates of so many of these contracts are bananas, right? So they're bringing affordability back to futures trading with those micros. And mark my words, we're going to continue to see more and more micros. There have been micros for currencies, a number of currencies for many years. Micros for crude, you all know, is brand new. I think micros for bonds are on their way. The micros for the indices, we have them. We have quite a few micro gold has been around forever. So use those micros, gang. Yeah, use those micros. All right. So scale out of the half position at T1 and move to stop to break even. This is how we don't let a winner turn into a loser. Okay. Now, if the markets keep going higher, terrific. We'll worry about what we have. Now, ES, let me show you why I have more ES than YM. ES sank into our retreat zone, all the way into our retreat zone. Top of the zone, middle of the zone, bottom of the zone. Okay? It's a whole lot easier for me to fill more of my budget, more of the number of contracts that I tend to trade that's suitable for risk to my account size in that zone than in that very aggro zone in the YM, which is why I nickname all these things: aggro, moderate, conservative. It's not just to put it out there, and it's not in any way to suggest probability. Why on earth would we take low probability trades, right? It's to remind us all in a simple nickname, hey, this should be a smaller position. Aggro should be smaller than moderate, and moderate should be smaller than conservative. Okay. All right. So that's ES and YM. And then some of you might have taken NQ when I showed you all that setup. I did not take the NQ. That would have been a fine trade, but I did not take it. So NQ was valid. I just did not take it. Why? I think I was too busy typing to get my trade in. It happens. Darn it. That was a nice move. 50-point move. $20 a point. It's $1,000 move right there. Some of you probably took it. Was valid. What we're right at. So remember I said, we talked about this in the beginning of the chat, those previous session levels, looking at the yen, looking at the Aussie, how powerful that can be. I'm not saying we're up and away from here. All I'm saying is there's a battleground to be had, and we can presume that until that level is broken, that the buyers will come defend that level. Okay. Am I still bearish the indices? Well, I mean, I'm not bearish this morning, Delta 70 intraday, but I'm still bearish the Nas and the Russell. Yes. But that's a daily time frame, right? Delta, so you're asking me intraday or end of day? I guess I should separate because you know me. I'm multi-time frame girl. Intraday or end of day is the question. We were never bearish intraday. No, right? We couldn't be. Right? Like I said, there might be things I want to do. There might be things I think that are going to happen, but feel and think have no space in trading. Trade what we see, and what we saw was what I outlined. As long as we're above that darn close, regardless of quote unquote what my lower intestine wants to do, right? Regardless of what I feel, what my gut is saying, I trade what I see. Even me, gang, I gotta tell my gut to shut the heck up sometimes. You know? Heaven forbid that thing grows some arms and fingers, then I'm screwed. That's just a visual, isn't it? But no, we do not want to go by, well, I feel, I think. I even hate when I say that. I feel, I think. No. What do we see? What are the processes? What are the rules? What are the levels? What do we see? And then after that, we can talk about what we think, right? But it's got to be predicated on the process. And the process is predicated on the levels, the colors, right? Oh, I have to remind myself too, Delta 70. Oh my gosh, of course, all of us are going to have biases. And I'm going to have a huge bias in the NQ because so far this year, some of my biggest trades have come by way of shorting the you-know-what out of this thing on the rips. You know, I've done it. This will be the fourth time if we can get the setup, I'll short the NQ. So, you know, my bias comes from, well, a lot of zeros from these shorts. But I got to remember, Rob, that has nothing to do with Thursday, you know, 9:30 a.m. And it's a tough thing to separate. I totally acknowledge it's a tough thing. After all these years, I've got to remind myself that. I'd say half of what I tell you all, I'm just telling myself. Truly, but I am mostly, yes, I am mostly bearish Nas and Russell. Now you might say, Rod, why are you bearish? What I see, south or at the 200. Previous trend before the chop was down, mostly red grab candles. And then with the NASDAQ, it becomes even easier when we look at this trajectory on the 10-year. I mean, it's going to be really tough for tech to have a sustained rally if the 10-year yield continues to go higher, which is reflective of the 10-year futures price heading lower. Yeah, makes sense? Okay. So back on over to the, and by the way, is there an index more important than the NAS? There isn't. If we talk about the king of the market, gang, it ain't the S&P. It's really not. I know everyone says, oh, the S&P, the S&P. Gang, it really isn't. And here's why. The S&P is a little bit of Dow, is a little bit of NAS. Like the beginning of the Donnie and Marie show. A little bit of country, a little bit of rock and roll, right? It's not really a look at the most important concentrated part of the market. Gang, that's tech. Like it or not, it's tech. XLK, number one weighted sector in the NAS, S&P, and number two in the Dow. For those of you wondering what's number one, financials. Okay. All right, hang on one sec. Okay. I've got my, every now and then I'm trying to stand, you know. I get so inspired whenever I see David's, he's got this cool, David's got this cool walking desk. I used to have a standing desk and then it broke and then I got lazy and just got a dining room table. Big IKEA dining room table, which I will tell you I love. But I got this nice reflexology mat. Yeah, it's exactly like standing on pins and needles. Boy, it is fantastic. So I've been trying to do a little bit more of that. It's on a walking desk, but yeah, you know it. All right. Get the old pins and needle mat out. Okay. So let's grab some questions here. So again, NASDAQ was a valid setup. Dow and S&P are where I have my exposure. And really, I should be long all three right now because that NAS was exactly what we talked about, battleground, daily time frame setup. And I just didn't get it. Darn it. Anyway, it's all good. Did anyone get NASDAQ? Did any of you get NASDAQ? That always makes me feel better. It always makes me feel better. If I'm not winning, I'd love to see you all are. It always makes a day. All right, Susan, love it. Grab some micro. Awesome. Love it. Love it. All right, so let's grab some questions. So we talked about the clearing range question earlier on. So the slow stochastic, why are they 21.3? Well, so remember, gang, And I think it's a very common question. Number one, no, we do not want to shorten the time frames. Do not want to shorten the setting. Remember, the settings they adapt. Let me put it this way. If I have a 213 on the daily, but I have a 21.3 on the daily, a 21.3 on the 5 minute, and a 21.3 on the 2 minute. The 21.3 on the 5 minute is naturally going to look at a shorter period of time. Well, let's use a moving average. Let me find a way to make this clear in my head and everybody else's. If I have a 200 period exponential moving average on daily, that's 200 daily candles. If I have a 200 exponential on a 5 minute chart, that's 200 5-minute time frames, right? 5-minute candles. So I don't believe in curve fitting. If you look at what new system traders and new traders do, and I was one of them 30 years ago, we start to curve fit. We start to look at what the markets are doing now, and then we start to adjust our settings so that when we look back on recent action, it looks like it managed the market well. Anytime you see anybody constantly updating their settings on an indicator, that's what they're doing. They don't know any better. They will eventually, but they don't know any better, right? So, and I mean settings, not levels. Levels will naturally change, but settings. The reason I've had this set to 21.3 for 2 decades is because I want to slow down a typical stochastic. So I think a lot of traders think, well, if I'm going to a shorter term time frame, I need to use a quicker sensitivity. In fact, it's the opposite, gang. It really should be the opposite if you're going to do that at all, which I do not recommend. We want to have a little bit of a systems philosophy, which is anything we use be universal and robust. And by the way, if you and I am definitely not an expert in this, I will tell you, when it comes to indicator development, and every now and then I'll get to pick David's brain, Mr. David Starr, Big Bad Voodoo Daddy. He is by a landslide the best indicator thinker and developer that I know, because he's looking at universal and robust. He's looking at those factors that a lot of us, look, he's been doing it a really long time, right? So I'm not going to say I'm an expert at this at all. When I have questions about indicators, I talk to David. He's the best, period. Not just that, simpler. I've had the chance to talk to a lot of folks. He's the best, period. He understands this in a way that if you have questions, ask him. So I just want to let you all know. But no, I don't want to have a shorter setting on short-term time frames. If anything, I want to do the opposite. I want to slow down something that has the tendency and the likelihood of being twitchy. Short-term time frames can be very twitchy. We want to almost smooth it out. And that's the way I look at it. I don't know if that helps or makes sense, but that's what we want to do. So I never, never, never suggest shortening things on the shorter term time frame. That's going to, remember we said we want to filter things? Filter just naturally means less. If I shorten the settings, moving average, slow stow, RSI, whatever, right? I'm going to get more. And that's the opposite of my philosophy of filtering. But I hope that helps. Do not use anything other than a 21K 3D 80-20. I've experimented with 70-30 on slow stow. I've experimented with 75-25 years ago. It actually does not work better. It actually does not work better. 80 for me works the best across multiple time frames. So that's what I stick with. Okay? That's what I stick with. All right. So as far as, for those of you wondering now, Rog, if we start getting a V-score reading or a slow stochastic reading at the top of the range now, could that be considered a target? Yes, it could be considered a target. And frankly, for some traders, aggressive traders, it could be setting up a short. But remember, the same reason that we preferred the buy, because we're above the previous session close is the same reason I'm going to tell you I'm really not a fan of shorting this market on the intraday today, because we continue to be above the previous session's close. By the way, also check your clock. It's 10:52. I should have had 3 trades on. I'll probably kick myself over that. I've got the 2 on. We should have 3. I'm glad some of you got the NQ. That makes me so happy. I can't even tell you. I'm pretty much done for the day. It's 10:52. We're rolling into what I call the Bermuda Triangle, where good trades, where great setups tend to go missing. Okay. We are seeing the European markets readying for their close. That means a certain amount of participation is leaving the market and going to the pub. We're going to see volatility contract. We're going to see volume contract. I'm going to manage the trades that I have. I will not open new ones after 11:30 a.m. in 37 minutes. Hard, pencils down. That's it. It's a hard stop. Pencils down. Okay. So I think there's also another danger. We have a couple winning trades on. The dopamine junkie in all of us, the trader who just pulled money out of thin air, I still feel that way, gang. 32 years in, I still feel that way. We want another hit. That's the hardest thing to fight off, that desire for that next hit. Manage what you have and remember who your best friend is as a day trader. Tomorrow. We'll do this all again tomorrow. Okay? So for me, day trading is a 2-hour thing. I think it's rather attention intensive. It's clearly energy intensive. And I think there's a diminishing return, at least for me. Now, let me just be fair to everybody. I find that most people, as far as your brain and your decision-making capabilities, are better in the morning, right? Your self-discipline muscle is one that usually does not get stronger as the day goes on. It actually gets weaker, right? They've proven that a number of ways. But everybody has a different rhythm, right? Everybody has a different rhythm. For me, if I could function between 4 a.m. and about 11 in terms of that is when I am great, right? And that once the sun starts to set, my brain's gone. You know, the hardest thing I do here at Simpler is an 8 p.m. webinar. That's the hardest thing I have to do. I'm done. The sun has set, and so has my brain. So ask yourself, hey, Rod, okay, great. You're a morning person. You're really a morning person. But I do pretty well in the afternoon and evenings. Cool. Study your trades and look at where your most profitable ones are. That's how I discovered this morning phenomenon for me. I plugged my trades into a trade studying tool, and looked at the time, but most of my winning trades were, and they were before noon Eastern. They were seldom through noon to 2. They were okay in the close. I don't trade the close well. Gang, nobody trades everything well. It's really our job to say, look, that is not my power band. John, I've never seen anyone trade the close like John. He's great at it. I'm really great at the open. And so I avoid those times of day where just mentally I'm not in my power band and my own trading shows that I'm not as effective. Does everyone get that? You really need to do a little bit of that self-discovery on your own. And it's really important that us on this side of the mic say, hey, look, I'm not good at stuff after about 11:30, 12 o'clock. My probability for trades drop. Mainly because I do also believe that volume-based tools are less effective when anchored in the morning, 2 a.m., 7 a.m., 9:30. I do believe they're effective as you progress through the day, if you use early anchors like I do. So those are all things I think that are really important. Again, the irrefutable fact is volume and volatility do contract starting at about 11 till about 1:30, 1:45 p.m. Eastern. There is one trade that we do, so, and a lot of you in the room know it. It's Mr. Neil Yeager's trade. Neil's had a very cool 12:30 Central trade that he puts on, and if the setup is there, it's a really good high probability setup. He's got a really cool little setup, and you guys want to definitely check it out when he's on the mic. And if you're in the room, if you're in the futures room, Neil has, I believe, a PDF breaking down that trade, that midday trade. So check that out. If that's something you say, okay, Rob, got it. You're not good at that time of day. I'm not, right? That's why I tell you, whenever I teach a day trade class, 9:30 to 11:30, pencils down. Okay. So why am I using a V-score versus slow stochastic versus V-score? So Fran, one of the things that I chose to do this year was in this room, whether that be my mastery or whether that be here in the futures room, not make people feel that they have to go run out and get a premium tool, right? I just didn't want everyone thinking, oh gosh, I just joined this room and now I've got to go buy a premium indicator. No. So I'm using a layout that is, for the most part, I think I've got a couple premium tools running on this, but it's for the most part all free tools that I give members access to, as you know. But, you know, I think I was talking about this yesterday, so some of you probably saw this. I've got a lot of monitors, a lot. But some might have more. So I've got V-score running. You know, look, if I've taught you a tool, believe me, I'm not abandoning it, especially one that I created. It's just running on different screens. So what you're seeing is one of 9 screens here. All right. So no, I'm absolutely still using the tool. It's just on another monitor. So when I slide that other screen with the V-score on there, it's just out of eye shot for you all. So I'm just sharing with you all, I think, what is a layout that is a great starter layout for everybody. And then as you sort of develop as a trader and you sort of find the style that you pursue, now you can go about finding the premium tools that, you know, suit you. If you've got the V-score, gang, I'm still looking at it. It's just not on the screen that you all are looking at. But there's another 8 running. Okay? Jeff, I'll tell you what, everyone says the same thing. And it's just a matter of, do you need it, right? When my husband was trading with me, he looked at the 4 monitor layout that I've got behind this. It's a backup. And he says, wow, this is a lot. And then after he started trading, he says, I could see where more monitors help, because you can keep a larger chart on its own without having to cycle through different symbols. You just have it there. You can keep a news feed. You can keep the chat room. I mean, it's easy. If, as you get used to, you know, getting more input, I wouldn't go to 8 monitors. I didn't start at 8 monitors. I started with 2, then I went 4, so it just kind of gradually increased. And at 8, I won't kid you, I could use a couple of them. I could use another 2, because then I would put some Forex charts on their own too. So it's just a matter of how much you feel comfortable trading. Because right now I've got each screen, a 27-inch monitor, where I have a half chart on each side. I've got Dow, 10-year, gold, crude, NASDAQ, S&P, and sometimes I'll have the 60 up, Euro, and the VIX. Sometimes if it's not the VIX, I might have the 6A up, or the 6J, or the ZB. So that one chart, I'll just kind of cycle through different. And I'm not even talking about day trading stocks and ETFs yet, right? So I've got 1, 2, 3, 4. I got four screens where I've got 8 charts on them. Like, holy cow, what just happened? I mean, I don't mind. Whoa, the VIX just ticked down hard. The 6E just ticked up. What just happened? I think we had our U.S. Treasury auction, gang. We just had our U.S. Treasury auction, and possibly our Kansas City March manufacturing. Who cares? Scale out of another half now, gang. I don't know what this is. I do not care. Scale out maybe another half of what you have left. 44.80 up to 44.85 if you want to be a little greedy. I'm okay with that. And I'm probably going to flatten out of my depth. I don't have that many contracts to begin with. What the heck was that? Oh, see, is it a Ukraine thing? I don't know what that was. Okay, anyway, if you can take advantage of that, scale out again, that's fine. I don't know what that was. Wow. Let's see if it retraces its steps or not, though. It might. It might retrace its steps. If not, we're perfectly fine. Yowza. Trader Momo says too many monitors. Nope, not even a little bit. All right, so moving on. What else we have here? Minor high on the NQ. Hey, there it goes to 11. Minor high on the NQ. Only 8.5 points higher than yesterday. Does that qualify? Is 8 points? I don't follow your question there, my friend. It's 8 points of scratch in NQ. Well, NQ is moving higher, so I don't quite follow the question. It goes to 11. Does that qualify? For, yep, oh no. It qualifies a minor high. Oh, okay. Yes. So the date we're talking about, here's the problem with it though. The minor high was 322. It goes to 11. We had a lower high the next day, but it was an inside candle. We've now got 2 inside candles since that higher high. It's just taking too long. It goes to 11. It's really just taking too long. I don't mind one inside day. The minor high pattern goes from a 3 candle pattern to a 4, right? But no, I think it's starting to take too long. Does that make sense? A minor high pattern is 3 candles in its most ideal structure, right? Higher highs surrounded by 2 lower highs, or lower lows surrounded by 2 higher lows. Inside candles don't invalidate, but if we get too many of them, that sort of crispness of the reaction is starting to dilute. Yeah? Okay. So the next question or comment is, it could be, in terms of the volatility, the jobless claims report. Trader Momo, you do know that came out at 8:30 this morning, right? So no, I'd probably say not, right? Because something that came out then would have been reacted to, 2.5 hours ago. Yeah, makes sense. So there's usually a good degree of proximity to that. Yeah. So I don't know what that was. It's okay to say we don't know what it was. It's okay. I don't know what that was. That was a massive amount of volatility with nothing scheduled as a hot zone. So it's okay to say we don't know. I'm going to guess it's either a Fed head or it's Ukraine. Don't know, right? It could. I think Evans has already spoke. Bostic is scheduled to speak. It could be Bostic, gang. Because remember, in terms of hot zones, Bostic was up. He's up at 11. So my initial thought is it's Bostic or it's Ukraine to create that kind of movement. But I don't see anything on the news regarding Bostic yet, so who knows? But that kind of wick often has, especially within the context of strength, like we're dealing with right now, sometimes we'll have a little bit of foreshadowing, meaning we could see more strength. It could just chase it back up. We could see more strength. Does that make sense? Look, it could be a wick and then it contracts really quickly, but we should start. We are probably heading in that direction anyways. We just got so much of it all at once. So I would say at this point, gang, it's 6 minutes after 11. Target 2s are great, but I think it probably makes sense to also put a safety net under the long position we have. In other words, trailing stop. All right, we probably want to start looking at a trailing stop at this point. So One really easy trailing stop. Let's go right back to volume. Put a trailing stop below the point of control. That would mean we put a trailing stop, say, below 34,420, so 34,415. That's fine. I'd rather use 34.4, but as long as it's below that point of control. On the NQ, well, I don't have any NQ, but I would say if you've got the NQ, maybe 14,535, 14,535, and on the ES, oh, that's a tricky one. How about just below the retreat? Oh, sorry, retest. So we've got this retest level. Let's just put it at, say, 4470. 4470. All right. So we're just, look, there's no magic to this. Just don't cinch it up any tighter than the hourly price movement range. So if you know the hourly price movement range for this time of day is on the low end about 16 points. Wow, that's a lot of points. 16 points. So, I mean, I usually don't want to be any closer than that. Wow, that would actually push us. So we had a high at 86. Wow, okay. So, yeah, I really don't want to be much closer than 70. But I'm okay with a trailing just below the high of the clearing range, just below that. But that locks in a certain number of points. But the tricky thing about a trailing stop is, much like a safety net, it needs to be far enough away that there's a little bit of excitement, right, to the high wire act. But it can't be so far away that it doesn't act as a safety net. It's a fine balance, right? We don't want to smother the trade, and yet we do want to keep a certain amount of unrealized profit intact. There's no magic to it. We try to use historical volatility, previous highs and lows, or volume if possible, right? But there's no real science to it. Just a number of levels that we can consider and not smother the trade. Okay. Okay. So I still don't know what we had there, but doesn't matter. Things are still moving in our favor, which makes me really happy. Okay. Next up is let's see. If all the indices pull back to the 21 EMA on the weekly, oh, okay. Pull back to 21 EMA on the weekly, or are pull back to? Well, I don't have a 21 EMA weekly in play on the ES, Alan, on the NQ. I guess I'm not getting the wording. When you say pull back, I mean it's below the 21 on the NQ. But have any thoughts of putting on a longer put option plan, say QQQ? Okay, so 21 on QQQ or NQ futures, I'm with you. So would we get short off that on the weekly? I don't use the weekly for trades, Alan. I guess that's the first answer. I don't use the weekly for trades. Gang, I'll tell you what. Anytime I see traders shift from a daily to a weekly or a monthly, I know why most traders do it. I'm not saying this is all, but most. It's usually to justify a position that they have that's not quite going well. Or it's usually they justify a position that they'd like to have. Remember, a weekly time frame, that candle, that one candle is coming up every week, right? It's showing us an entire week of price action. An entire week. So the levels that are relevant on a daily don't always have the ability to survive a weekly range. So case in point, and by the way, the daily is psychologically more relevant than the weekly. So let me be an example, right? 14,690, let's call it 14.7 between volume and the 200. it's going to be really important on the daily. Mean anything on the weekly? No, it's just part of the range. I mean, the weekly would just slice and dice that up, right? Does that make sense? So you will not see me ever justify a trade based on what I see on the weekly, or more crazy the monthly. That's bananas, right? That time frame usually just has no relevance unless a week level happens to also be relevant on a daily. You will not see me do that. Weeklies and monthlies are great for longer term, longer time frame, time horizon positions, or even for our investments. You know, when I start getting out to a weekly or a monthly, we're talking 6 months to 1 year in terms of time horizon. Most daily time frame traders, if you ask them, hey, what's your sort of expectancy for this trade? They'll say days to weeks, not weeks to months. Weekly and monthly start pushing us way outside the typical time horizon of a trade on a daily. Does that make sense? So you won't see me do that. And I will say probably not, especially specific to the QQQ, because the level that's most relevant to me, and I want you all to see it, right? I want you to see, okay, Rob, why? You know, what is it? That 200 is right there at a level that the weekly doesn't care about. All right? You know, a level that the weekly simply doesn't care about. So that's where I would say not super interested. But I do like the daily 200. The weekly 21 is somewhat interesting. I would like the weekly to be in a downtrend to do that. So they're independent from one another. Make sense? I'd have to be a little bit more bullish on a daily if we were getting above the 200, but I may not change my directional bias or bias in general on the weekly. Remember, the different time frames can be in their own structures. When they're not, great, but when they are, we want to be really careful. Okay? So that's the way that I would view that. That's definitely the way that I would view that. But very cool question. I love when you're thinking different time frames, but I want to be specific to the levels. And remember, the 21 is up at 14,785, so almost 14,800. I mean, 14,800 would put us, you know, way up here. Yeah. So anyway, I think that makes sense. Again, that's just my 2 cents. That's just my 2 cents. If you've got a process that's working for you with that, hey, like I like to remind everybody, I don't want to yuck your yum, right? If it's working for you, cool. All right, next up is, bear with me, gang. Yeah, if that spike was Ukraine related, gang, yeah, let's not hold our breath. I mean, look, we trade what we see. It's kind of good to know what the underlying, it would have been far more meaningful to me if this was really predicated on Fed action. I am zero interested in anything related to a Ukraine trade. In fact, I'm really more upset that I know that my crude oil trade is going to be affected by the Ukraine narrative, right? We know that wheat is absolutely a Ukraine narrative, but corn and soybeans aren't. Ukraine is not a macro yet, gang. It's not a macro at all. I don't believe it's ever going to become a macroeconomic factor. Maybe it's exacerbating an already intact uptrend in inflation, but did not cause inflation, right? So be very careful confusing macro and macroeconomic. I don't talk about the former. I talk about the latter. A rate of change study of inflation, growth, monetary policy, money supply. We can throw jobs in there too, because the U.S. central bank has a dual mandate, inflation and jobs. All right, so next up is, so be careful that Ukraine stuff is oftentimes very much faded by this market. But good to know. So very good to know. All right, how are we on time? I'm going to make sure I give everybody a little bit of a break. I know many of you have been going strong with me since 9 a.m. and I'm sure you would not mind a little bit of a break before Mr. David Starr gets here. You don't want to miss out. If you're interested in Elliott Wave, David is the best Elliottician I know by a landslide. Indicator development, David. Ready, aim, fire, and voodoo lines. David created both of them. So I want to make sure for those of you who want to key up some questions, definitely. Pick his brain. All right. As far as momentum intraday, I don't have any exposure to crude, gang. So I think there's a question about momentum in crude intraday. We gotta get above and stay above the point of control. Not there yet. As far as end of day goes, look, again, one of the issues with crude is not volume and it's not the technicals, it's none of the secret squiggles. The issue with crude is going to be that some of the recent acceleration is not the initial inflation narrative that was sending crude higher in a very nice and slow way, in a really steady way, but rather this parabolic jump that's erupted, literally, since the Ukraine narrative. So what goes up quickly does tend to come down quickly. That's the nature of a parabolic market. And so secret squiggles and volume, look, we want to be generally long crude oil, but if we get narratives about next up is, I think we're getting close to the end of the questions. So we'll kind of do a recap of what we've got going on right now. Again, I do not have NASDAQ. I'm glad many of you do. I'm down to just a very small amount of Dow and still have half of my S&P position. The next target up is likely going to be closer to, let's see here, intraday. Wow. Well, let's stick with those trailing stops. For now. The volume, gosh, nothing up here. Interesting. I mean, we can look at 44.90 or closing in on 4,500. I don't know if we'll get there, but let's stick with the trailing stops for now, and we'll see what a T2 would look like. When we look at volatility, what's our volatility tell us? All right, volatility for the S&P is, yeah, between 92 and 95, gang. Anywhere between 90 and 95 would be probably pretty good. 89 and 3/4 to 95 and 1/4. 89 and 3/4 to 95 and 1/4. Somewhere in there is likely going to be a T2 if you already did not scale out with this crazy wick. And actually, if you want to scale out at this level, that's almost near the high of that wick. That's fine too. That's absolutely fine too. All right. Okay, so in the notes, again, we have a lot of, well, not only what we did today and what we were keeping an eye on, but also some of the general notes for just the way that I look at trading. And again, I'm 9 minutes from pencils down. So my day trading day is pretty much grinding to a halt. In the premium video tonight, we're going to talk about daily gold, daily euro, daily NASDAQ, daily Russell, our corn, beans, wheat, and DBA, which is your ETF that I kind of call the S&P for commodities. We'll talk about that. Let's see. What other questions do we have? Do I have any thoughts on oil and currencies due to Russia changing trade in oil and gas to rubles? No, I don't. I don't. Central bank policy is going to be, I believe, still far more impactful. But at this point, I don't. If it shapes up into something more later on, then maybe. But no, for now, I'm going to stick with the short euro position or long euro FXE or 60 puts. But no, it doesn't change the trend that we're seeing in crude or the dollar. No. By the way, those narratives are always interesting, and they're always out there, different narratives. Remember, the easiest way to give a narrative a gut check is see what price action's doing. Because here's what I've found about news. If I know it, me, Rodney, if I know it, there's plenty of other traders and investors moving a whole lot more money than I am that also know it, and it's very likely already been priced in. So do this when it comes to news, other than data. I don't mean data, but when it comes to news or these kind of headlines, presume they're priced in. Because I'll tell you what, gang, most of the time, the Pareto principle definitely applies. Most of the time, it's already known. And if it's known, it's either been ignored or already been discounted. All right? So if I don't see suddenly dollars in a downtrend, or I don't see crude suddenly in a downtrend or significantly weak, I'm just not going to worry about that as being impactful to price. It's tempting because financial media has made a job of us thinking we need to trade the news. Well, no, what they need is us to stay tuned in, right? So news becomes a narrative that they're convincing us on television that we need to know. Gang, I will tell you this, we do not need to know it. It will very seldom do anything but cost us money. So if there's a narrative that we think is important, the first thing we need to ask ourselves is that bullish or bearish, bullish or bearish, the underlying symbol? And then we go to the next step, which is that being priced in as such? And if those things aren't happening, if I don't have the clarity and I can't go check the clarity, yeah, leave it be. That's going to be your best sort of gut check for now. All right. Okay. So, gang, I'm going to give you all a quick, 3-4 minute break here. And we'll go from there. Last question. Would I still get into oil? I would, just not today. Yeah. I mean, where it's at right now, no, my friend. We got into oil back in here on the 15th, 16th, 17th, on the pullback, right? If you've been following my work for any length of time, you know, never, right? Yes and yes, which are actually the last 2 times that I bought oil. This is the dip thing. That's the dip. You will never see if I'll tell you what, gang, do me a favor. If ever I'm buying into strength in a trend, call the men in black. I have been abducted by aliens. 100%. Someone has stolen me. I'm on a mothership somewhere. It's not going well. Get Will Smith. He's got to rescue me. For sure, I've been abducted by aliens, if that ever happens. All right, gang. My futures folks, I'll see you all in premium video tonight. We do our macro market deep dive, macroeconomic market deep dive today, our weekly deep dive. And everyone else, take care. Our live stream folks, thanks for joining us here at Simpler. Mr. David Starr is coming up next. You don't want to miss it. Have a great one, gang. Take a quick break. Be good to each other.
We're a trading community, trading with our own money. Simple as that. If we enter or exit a trade, you'll know how and why we do it.
They're just doing what they say they do. They'll just help you be a better trader.
While secrets are fun, keeping them doesn't help you learn how to trade.
This is a great place to learn and to become an independent trader on your own.
We're so confident you'll value your time here that we're offering a $7 trial. Go on, give it a shot.
Please, quiet.
Okay, a good Thursday morning, everybody, and a Thursday morning where, at least for the moment, everything is pretty much playing out in a manner consistent with what we're looking for. So, right? So, gosh, we've been talking about this since Tuesday or even before, right? The importance of this voodoo snow line that that we were projecting up towards here on Tuesday, and citing that as an important level where we might reflect, right? And where we in fact did reflect from, right? Starting back down yesterday. And then we said, look, the important spot to watch is going to be this voodoo skyline down here at 44.54. Oh, am I supposed to be in the other room as well? Okay, then we will get that going. Just a second. Okay, hey folks. So we should be ongoing now in both the futures and the options rooms. David here, and we are looking at a market that is doing just what we talked about, right? So we've been talking about how we were looking for resistance up here at the voodoo snow line. Remember, I said on Tuesday, hear me now, believe me later, watch this level. And that is the level that we ran into here on Tuesday and came back down. And we also said on Tuesday, as well as repeated yesterday, if we do reflect there, watch the voodoo skylines here at 44.54 and again down at 44.50. Again, I said, right, hear me now, believe me later, these are going to be the important levels to watch. So hopefully, right, I mean, the proof is in the action, right? We ran right down to the skyline and and bounced from there. So everything is going pretty much exactly to plan. Now, for my friends in the futures room, you guys, in addition to the joint session we had in both rooms yesterday, we were able to track this throughout the day yesterday because we were together again on the close, and we were able to see that that when we did come back down, right, that that this move from yesterday's high into the low yet another reason to like this level, right? Not only because it is that voodoo skyline, which was our reason to like this level even ahead of time, right? Right, we like this level ahead of time. Even before we reflected down from the snow line, we were able to say, hey, if we do turn down from the snow line, watch this spot, right? And then as price action came together throughout the day, right, and I'm not going through this, you know, just to say, hey, this came together. I'm walking through this because as we move into what to look for next, right, there's logic about what's next. It depends on the interpretation of this move down. And so it's useful to walk through what the interpretation of the move down is, right? And it really, when we look at it from an Elliott wave perspective, comes together as a narrative of the market, and we want to catch up on where we are in that narrative, right? So when last we caught up with our intrepid S&P 500, right, we saw this move down yesterday, and then we saw this bounce into yesterday's high. And once we came down from that bounce, we were able to project where this leg down from yesterday's high would be equal to the leg down from Tuesday's high into early morning yesterday, and saw that they would be roughly equal, a very common proportion for counter trend corrective three-wave moves was lining up very, very close, about 2 points away, $1.98 away from the voodoo skyline. And then, right, in addition to that, in addition to having that line up, right, we know that, and we talked about this yesterday, the A wave and the C wave of a three-wave counter trend move should each have 5 waves internal to them, meaning that we should see this structure that I mentioned where we come down in 1, up in 2, down in 3, which is generally the longest and strongest, and is going to have its own 1, 2, 3, 4, 5 wave structure within it, right? Then we bounce it in a wave 4. We get a wave 5 down, and then this move is plausibly complete. And we were able to do other projections on the way down, right? Like recognizing that while it's not always the case, wave 5 is often very similar in length to wave 1. And so once we started this late day dive, we were able to project where those were going to be equal and see that it lined up at exactly the same spot, right? We can pop this in just a second. Right, and see that that would have been equal right here at the voodoo skyline. So there were a lot of reasons to think that this move had done enough at this low, right? So we talked about shorting, right? This bounce that we had yesterday in this area, and then adding to it once we came down to make it look like that bounce had run out of gas, taking some scales. But our objective yesterday was to see the cash S&P back here, shorting in the futures. We did that trade together in both rooms live, right? And right, saying we're looking for here, but that was our objective for the trade. That's where we got at the end of the day. And we talked about the potential that this would come right back up here today. Now, look, if you took the trade back up, it was probably in the futures, right? You could have done some things early today. You could have bought on the close in the options markets. There were reasons to like this level right in the close. There were still good opportunities to get in. Right. The other things that we talked about yesterday, as far as spots to get in, we talked about, one, identifying this wave 4 and getting in once we break above that wave 4 with a stop below the low. That would have gotten you in, right? We talked about getting in on a break of the trend line drawn from yesterday's high, or Tuesday's high and yesterday's high, right? We popped above that, right? All of those are levels that would suggest that this move down was left corrective and that we would likely continue up minimally till we got to a new high, right? So whether you did this in the futures last night, as I did, right? Based on stuff we all talked about yesterday, or you did it this morning in the options once we got these larger triggers in the cash market, as I did also, right? This is doing exactly what we've been talking about all week long, right? Monday, resistance here. Or sorry, Tuesday, resistance here and looking for a pullback to at least here. Support exactly where it measured to, and then turning back up after triggering what we wanted to see. And thankfully, not doing it with a huge gap up. I mean, it was a little gap up, right? But staying right in this area, giving you a chance to get in. Now, this was sloppy getting together today. This gave us a little bit of a head fake here, acting so choppy as it did. And that's worth talking about, even though we're even though, again, as we stay above this channel line, this is not going to be a significant concern of mine. But we always need to remember that just because something looks corrective, and this definitely does, we walked through yesterday the things we wanted to see in order for it to look like a correction. We walked through today all the things that we did see that made this look like a correction. That doesn't mean that the correction is over. There's always the possibility that it turns into a double correction, needing to put in a subsequent three-wave move down, right? A first three-wave move down like this, a second three-wave move down like this, and only then turn back up. But once something looks corrective, as this does, we're going to expect that we eventually get to the upside. Look, now that this leg is growing sharper than this action up, we can be a little less worried about what about this idea of a double correction, but we can't rule it out. So if this were to pretty crisply come back below, let's say, this swing high, maybe a warning below this swing high, then this would have to be back on the table. It would still be longer term, larger degree bullish, simply because, right, this looks corrective. So if it did start to run out of gas on the bounce, my expectation would be modestly below, right, modestly below yesterday's low for another three-wave move, a move which should hold, right, should hold this lower 44.15 voodoo skyline, right? A solid break at that 44.15 level, and we're going to have to start to be concerned that that this might be even more bearish, right? So look, that's the picture, right? So we had all this mapped out yesterday. It is coming together today. I don't think there's anything to do right here, right? Because the decision spots were the ones that we laid out ahead of time. You know, we got a few sharp moves and some wiggly action in here. It makes it a little tough to kind of figure out, well, let's actually do this on the other chart. If we are immediately bullish, exactly where we are in that progression. I'm thinking 1, 2 like this, somewhere in a wave 3. Again, we had this early spike that gave up a lot, and we're choppy up into that spike. That makes assessing the very short-term action in here a little tricky. If this is wave 1 into here, wave 2 down, we can of course pop in some fib levels to figure out where this might get to, right? Knowing that a wave 3 often has fib proportionality to a wave 1, although it isn't required, right? We're already through, although not by much, the spot where wave 3 would be 161.8% the length of wave 1. The spot where it would be 261.8% is a little beyond the snow line. So it's unclear that we get there all at once. Because, again, we don't need to go directly to those fib levels. But with nothing else to go on, it's an interesting spot to look at. But remembering what we said, if we do head back up after a corrective pullback in an uptrend, our expectation for the destination for the next leg up is twofold, right? We have price objectives. Counter trend down in an uptrend means that once that counter trend move is over, either at yesterday's low or modestly lower, we're going to expect to, from a price perspective, minimally get to back above Tuesday's high. And then we have objectives from a pattern perspective, right? Those objectives tell us that if we have resumed an uptrend, that the next leg up, right? The leg up from yesterday's low should continue until it has a 5-wave structure, right? Minimally. How far that goes remains to be seen. All the way up to 46.25 may be ambitious, right? We can start to run some numbers on where this might get to. Right? And there are a few ways to look at that, right? If this is the wave 1 up from here of the 5-wave move, for which the move up from yesterday's low is going to be wave 5, we can often look for those to be similar in length. We talked about that just with respect to this little drop into the close yesterday, right, on much smaller time frames. Now, if we measure where that would get to, because this was an awkward little wave 1 down here possibly, you know, that may not come into play here, but we should at least measure where it gets to, right? 45.74. So we'll look at that. Right? We can also come in and say, at larger degree, if this is wave 1 of a bigger move up, I'm not sure that it is, but it very well could be, and this is wave 2 of that bigger move up, then this leg up should finish that circled Roman numeral 3, right, this move. And so we can see where this leg would have proportionality to this leg, as we often see fib proportion there. So if we come in and look to measure that, right, we can see that it would be 161.8% right in here at 46.01, right? Now, that's about 6 points away from where this leg wouldn't be equal to the wave 1, where it would be 127.2%. So it's clustering a little bit, but not great. But we can note that 4,600 is a round number, like markets tend to find. So that is yet another thing that we can put there that is potentially clustering with that area, right? Now, we can also measure this move down from Tuesday's high to yesterday's low and look at where this leg up, this subsequent leg up, would be proportional to that move down. And that's going to come in. We're going to have a 161.8%, and is going to be here at 45.62. Not too far away from 45.74, but you know, still 12 points, right? And the 261.8% is a good bit further. Now, first target on a corrective pullback like this is always going to be the 1272 external retracement. So that's going to come in a little bit lower. Up. Right, so that's coming in at 45.40, but we don't have anything else that's clustering with that. The only thing that suggests maybe the 45.40 at this point is that if we go back into smaller time frames, Now, if this is something like 1, 2, 3, 4, 5, that doesn't get us up into those higher levels. It gets us towards that 45.40. So look, we're going to need to gather some more information as this unfolds. And I suppose just kind of use that 45.40 right now as a first target. But as always, remember, we've got trend moves, we've got counter trend moves. So anything which pulls back with only a 3-wave counter trend move, that's going to keep the immediate focus on the upside. Right? And so we'll keep watching it, right? Remembering what we talked about, that while I do like the idea of more immediately up, more directly up from here, back below this swing high, if we want to use round numbers, just 44.85 cash S&P, right? That would suggest that maybe this idea of immediate continuation to the upside might be on hold. And if it does, right, maybe looking down to somewhere between those two skylines, knowing that a break of this level, break of that 44.85 area that we talked about, that based on everything we talked about would just be a warning that the uptrend might be deferred, might need to come back down into this region prior to that expected bullish resumption. Right now, it looks like the bullish resumption is now, not later. But again, we always want to assess, and it's nice to have a technique that lets us assess, okay, we see what the market seems to be telling us. Where is it wrong, and what would happen if it's wrong? The immediate upside is wrong, below that 44.85 level, right? And because the move down from Tuesday's high appears counter trend, we would just expect a bigger counter trend pattern, right? But that idea that this overall move is just counter trend, and that we may be in a trend move up from the February 24th low, that runs into real trouble below this 44.15 level. Right? And that's got us caught up on the game plan, right? We got here with a game plan. The game plan's been working. We don't want to let that cause us to be too comfortable. We always have to be open to the idea that the market is going to trick us. And it does that far more often than we would like. Right? And so we've always got to be updating as we get more information where something will be wrong. Thankfully, at this point, we're able to raise that spot where things would likely be wrong to above where we would have established positions. Yeah, so Mike, I love motive wave. Now, with that said, you need to be right. You need to recognize it for what it is. It does have quote unquote automatic Elliott wave counting ability. It's not any good because no software is good at counting waves. But if you're looking for if you're looking for a tool that that lets you if you're looking for a tool that that lets you come in and sort of have an Elliott wave word processor, right? Word processor isn't going to write your novel for you, but it is a gazillion times easier to write your novel on a word processor than without, right? It's the same way it is here, right? So if I say, well, gosh, I've got an A, B, C zigzag down that ended here, right? And the C wave is going to be 1, 2, 3, 4, 5, and maybe we plotted lower, and I want to move the end of this correction lower, right? Well, yeah, so I just, grab this thing and I drag it, right? And it's not like just using text labels where I've got to move everything. It knows that wave 4 ends where the ABC ends, right? So it drags the C with it. It knows the C wave ends where the 5th wave ends. And it's just really easy to move everything around. And then, of course, since there are, right, these typical Elliott wave proportions for certain waves, right, where we might want to measure where the C wave would be equal to the A wave, right? Then I can do that with one click. Now, I can also just throw a regular old, fib projection on there, and in about 2 seconds draw it myself, and just start up here, measure down to here, up to here, and I can see where they're equal. But when I do it based on the Elliott wave, then if I move my wave labels around, my projections move around also, right? So if I'm measuring where this wave 5 would be equal to this wave 1, well, if I look at the wave count differently and I ask myself, well, what if wave 4 ended up here as opposed to with a flat? Well, it just adjusts where those proportions are. So now look, there are a lot of great tools, right, for drawing. I love the way it does drawing. It's a fast, capable platform. I don't have it stitched out to my broker, but look, I love this platform. It is expensive, especially if you want it with all the Elliott wave and fib tools and those sorts of things. But I really do like it. If you do end up picking it up, please do let them know that you found out about it from Simpler Trading. We are working to add more of our tools to the platform. Now, the things I am going to show you now are in beta test, right? They're not live yet. So don't expect the minute you get the platform, you can call Simpler Trading support and ask for these things, right? But we've got the Voodoo lines in beta, right? We've got Ready Aim Fire Pro, got Squeeze Pro, all in beta, and I'm working out a few little bugs, but look, we ask them for help on a lot of stuff in terms of getting features that we use into the platform, and so the more that we show them that our folks are using it, the more resources we will get from them. So anything you can do to let them know, hey, I found out you from Simpler Trading, and we use stuff there. That will help us continue to get good stuff in there for you, right? I think we may have a link with them, but I don't know where we're at with that stuff yet. Right? But yeah, Since you asked, I do love this platform. And look, we can talk about whatever else is on your mind, folks, because you know my plan. Right now it's working. We are pulling back a little bit here. I would like to see this find some support pretty darn soon. I can say that we got to give it room back to here. And I did say it, but I don't want this to get too frisky to the downside. Yeah, so gold is tricky here. So I've got a big long-term picture in gold, right? Um, and the big long-term picture has played. I mean, I've been talking about this since the all-time high, right? Since the all-time high, I've been talking about the fact that that this move down looked counter trend, and therefore eventually we should be headed up towards an all-time high again, right? Now it looked like it was coming together as a triangle, and that very well may be what's happened, right? So we may be finished with that correction, but we've gotten most of the way to the minimum objective that I've got. So there's nothing to do now, right? Look, if that is going to play out, then it should get at least a little bit higher. But realize that when we were in this sharp move up right in here, there were some significant discontinuities in the gold market, right? Some structural issues, just like there were structural issues in the crude market when it went negative, right? That they were market structure issues, right? And sort of physical delivery issues. We had smelters that were offline because of COVID and weird and weird stuff that did structurally in the market here. So it could be that this falls just ever so short of that high before coming back in, or it could be we have a little bit higher or a lot higher. But the overall idea that this was counter trend and that we should go back up, that expectation has mostly played out at this point, right? And so a lot of times gold is really clear on really long time frames, but the very short term implications of the price action here can be harder to read, right? So so this is we're at the point where this is already mostly done what we need, right? And then well, let's take a look at this. Just to see, this is spot gold as opposed to the futures, which still had structural issues back then. But you can see we've come even closer to that all-time high in the spot than we have in the futures. And that's worth noting, because when you do look at long-term futures charts, there are adjustments that make it hard to compare swings from several years ago to now. We still didn't get all the way there. And this is on a longer term scenario that's already moot. But so I don't know that view on gold is all that useful, right? Like I said, because it's already done most of what we're looking for. So I'm not sure what's going on with the S&Ps coming in here. This is looking not as clearly counter trend on downside as a bull might like. So I would be cautious here. And so again, this we already have this gamed out. And if this does start coming through support, then we have to ask the question: Is a counter trend move from Tuesday's high still ongoing? Either to revisit back down in this area. We have a scenario for that. Already prepared over here. Which could require, as I said, another 3-wave move down into this region. Before back up, right? Or another possibility is that we wedge into a triangle here before up. That would also fit with the idea of an ongoing correction. Yeah, Lawrence, I'm not sure what you're measuring the 78.6 of, right? I guess maybe maybe you're measuring from this swing down here, right? Right. We could even get modestly below that, right? Now, so what we can do when we come in and we're combining Fibonacci with Elliott wave, right? So one of the nice things about combining the two is that Elliott wave can help inform your Fibonacci. Fibonacci can help inform your Elliott wave, right? Oh, yeah. So so that would be where this leg down, right, is 78.6% of this leg down. Now, a more typical proportion would be where they would be equal, right? And if you ask me sort of a priori, early in the move, if we were heading back down for a double correction, where would I look to? It would be here for 2 reasons, right? Or at least 2 reasons. So the first reason is the more typical proportion, not that we have to go there. Pattern is always more important than proportion, right? But we would look to where this leg would be equal to this leg. But if we come back to, after zooming out, our larger degree impression of how a larger bullish advance could be going, right? So we'd have wave 1, wave 2, just this circle 1, circle 2, and then we'd be in circle 3 to the upside here. And if that's what's going on, right, circle 3 should have a 5-wave structure within it, right? Because it's going in the direction of this uptrend that we think is going on. So we can plot that out here, 1, 2, just with these parentheses numbers, parentheses 1, parentheses 2. This is the 5-wave structure within circle 3 to the upside. I know it can be confusing first time out for some of y'all, right? So then parentheses 3 up to Tuesday's high, and we'd be pulling back in parentheses 4. So what we want to do is we say, okay, parentheses 4 is correcting something. It's partially retracing the last move in the opposite direction. So that would be the move from down here last Monday into Tuesday's high, right? So if that's the move we're correcting, right, the parentheses 3, which starts where parentheses 2 ended here, runs up to the end of parentheses 3, and we think parentheses 3 ended here because it has the requisite 1, 2, 3, 4, 5-wave structure, right? So we just take that move from 2 to 3, and measure from here, and then measure retracements proportional to it. And the reason we do that is that there are common fib proportions for fourth waves relative to third waves. We're not looking for things like a 61.8 retrace, which would be much, much larger than we would typically expect from a fourth wave relative to a third wave. What do we expect for a fourth wave relative to a third wave? Well, something like 38.2%, which is down, right, which is down here at 43.84, right? Or 23.6% is also not uncommon up here at 44.37. But we have other ways to catch an idea for how this might come together. And that is, we will often see, right? Remember that the move up in parentheses 3 has its own 5-wave structure. And so there is a fourth wave pullback within parentheses 3. So parentheses 4 usually comes into the range of the fourth wave in parentheses 3, the fourth wave in the third wave which preceded it, right? So knowing that, what we're going to do is we're going to presume that it's more likely than not that our parentheses 4, if we're right about what's going on, is going to end somewhere in this area. Now, if we're done here at yesterday's low, then we already finished in that area. But if we're not done, right, then we're probably looking for something that that lines up with all of our other ideas, right, and is somewhere in this range. And if two of the reasonable fib retracements for a fourth wave are 38.2 and 20.6, and 23.6 is the only one which is in that range, right, then 23.6 is probably what we're looking for, right? If it's going to end up at a fib proportion. Now, if we've got a short-term top in place for a day or two at today's high, right, then, as we just saw, measuring down where this leg of the pullback would be equal to this one, that came in at the same spot. We've got a voodoo mogul there. It's above this 44.15 level, which we said shouldn't be broken. It's all within the range of this prior fourth wave. So right now, without any additional information, if you said to me, David, if this pulls back, right, in turning into a double correction, remember I still said if, right? If we're doing that, where do you think we would get to? And I would say, gosh, somewhere in this 44.35 to 44.40 area, because we've got a lot of stuff that all lines up there. Now, just like we did in this pullback from Tuesday's high into yesterday's low, we can refine that view as things go forward, right? So, so just like this had a 3-wave move within it to the downside, if we come down here, and we get a 3-wave move, we'll come down, up, down. And once we get this first leg down and this first bounce and start to turn back down, we can project where this leg would have proportionality to this leg. And we can project internal stuff within here. And most importantly, look and see if there are clues where the pattern would look complete. Because one of the things that led to this bounce is the pattern looking complete here. So those are all things that we will watch if we continue down to assess whether they also tend to line up with this 44.35 to 44.40 area. But for now, things are lined up there. And if we continue down, then we'll try measuring towards that area. Now, some other things that we can look to just as we continue to try and form a plan. Look, if this just turns right back up, then bulls are fine, right? But if not, we get a bounce at some point. So whether it's from here or lower, right, we come down, we get a good size bounce, and then we maybe get some more downside. If we do something like that, then we can come in and we can draw some trend lines around it. Just take the high, right, and extend a trend line through the bounce high, parallel line through the low that preceded the bounce, and anything, price just moved out from under my drawing, but look, if this does start to break down through that lower channel line, then that also is an indication that things may be getting away from us to the downside. So look, I don't want to be alarmist that we're wrong to the upside, right? This hasn't broken our level yet. You know, I just don't like pullbacks, even though my trade is well in the money. But if it does break some of those levels, then we have some spots to the downside to look to. I also don't like, right, that, you know, the patterns kind of in through here are a little sloppier, choppier than I would otherwise want to see. And so I don't have a very clear picture of where we are in the possible progression of this move up. That leaves me a little lost. There's nothing I can do about it. Sometimes when you're on the, you know, the 1 minute chart, the 5 minute chart to try and find the patterns, there's just, you know, there's just not enough liquidity to drive the price action to see the patterns as clearly on very short time frames as we would like. And so on longer time frames, recognizing exactly what we've talked about already today, right? That the move down from Tuesday's high to yesterday's low looks counter trend, right? And therefore it suggests up. Right? Just recognizing that there are ways that this could still be counter trend and up, totally consistent with what we saw in this move down, that just need to do more consolidating first before we head up. And right now, we have some areas which we said would call the immediate uptrend into question. And we've identified this 44.35 to 44.40 area as where we might pull back to if we do need to find support lower. I can't tell you clearly which. Right. And that's where I said, always be aware that the market, right, might prove you wrong. So always ask, what's our level where we're wrong? What's the pattern where we're wrong? What scenario might unfold if we're wrong, so that we can be prepared, right? The market will humble us all. And so the very worst thing that we could do is close out a really successful trade and think, okay, now I've got this trading thing beat. I know it. I've got a feel for this market. I'm on, because that just makes us overconfident when we go to put on the next trade, right? And so I've got my reasons to be bullish. I'm long now, but the very worst thing that I could do is say, hey, I bought this thing last night in the ES, pretty close to these lows based on analysis I told everybody about. Now I'm going to tell everybody how fantastic this analysis is. Gosh, that is just an invitation for the market to punish me, right? So the very The very last thing I want to do here is come in, right, and start to think, gosh, this did exactly what I thought. I know what this market is going to do, because none of us do. Right. And that's why I made sure earlier, and we need to reinforce now that we're coming back down. Where is this wrong? Because I do not like that this is coming back down. But I've got to have a plan. I've got to know where I'm gonna cut bait on the remaining portion of my position and go from there. And then wait till it clears up again. Using that same process, saying, gosh, when would it look like the pullback is over, so that we can get in. So what else is on your mind, folks? We have a few more minutes left. Suresh is asking, where did I get in long last night? So I got in the ES. Let's see. So I got in here, right? After the close, I flipped out half of my position pretty quickly, right? Just to pay for my risk down to the low, right? So that I knew that I could get out at roughly break even, right? Then, right, I trailed stops up using Trend Spark, right, on the remaining half. It stopped me out here. I walked away with some profit. We came back down pretty much to my entry. I re-entered right around the same spot. And I've scaled out of some of that up here, right? But other than scaling some of that, that's what I'm holding now. So that's how I traded it, right? That's all hindsight at this point, right? Based on the idea that we talked through, and this is continuing to come back in. So we got to be a little nimble here, because this, look, there are things to argue both ways. This leg is a good bit larger than what we had going up here, suggesting that maybe this is acting trend-like, but this is pulling back a little bigger than we would like to see. This is clearly an uptrend. So look, if this does end as a three-wave move to the downside and starts to turn well above these lows, that may be an invitation to try and get back in, right? But you know, things were very clear down here. That's why always take partial profits, right? And then manage the rest to make sure that we walk away with these things as a winner, right? Either that or do stuff with option spreads. So Miles took the trade also last night. Fantastic. And boy, this keeps coming back in. So I am very, very close to just booking the rest of my profits, right? That's my level. And go from that. No, Suresh, the alert that Miles is talking about is from Henry and I in the Voodoo Mastery. But we did talk about it in that last hour session live in the futures room. In any case, that's what I've got, folks. I hope you found it useful. we are unfortunately leaving our session with a little bit of ambiguity as to where the next move is, but a plan to manage that ambiguity, where the immediate short-term uptrend is broken, where the opportunities may be if it is broken, and we will keep going from there. So I hope you found it. Useful. Folks in the options room, looking forward to visiting with you again whenever folks will have me. And of course, now every Tuesday midday, I'm with you for that simpler tech segment for half an hour. Futures folks, I will be back with you tomorrow, same time, and we will have that Elliott Wave dispatch out this evening to catch up on the Elliott Wave scenarios. So thanks as always for spending a little bit of time with me, and I will see you all again soon.
We're a trading community, trading with our own money. Simple as that. If we enter or exit a trade, you'll know how and why we do it.
They're just doing what they say they do. You know, they'll just help you be a better trader.
While secrets are fun, keeping them doesn't help you learn how to trade.
This is a great place to learn and to become an independent trader on your own.
We're so confident you'll value your time here that we're offering a $7 trial. Go on, give it a shot.
Good morning, good morning, good morning. If you can hear me, this is Neil. I am coming over from the training room, so that's what we are doing. Continuing conversation from there. Not dual broadcasting. I was just finishing another session in another room and hop over into here and kind of get an idea of what we're looking at. Tell me where you want to look. Do you want to start inside out or higher time frame down? Until I learn that, I can take a look at where things are right this minute. S&Ps, let's see. We traded into about 90 something right there. Come back. It is getting really close to what the bottom of this break. I would look for the bottom of this break to be. It's getting really close. Getting really close. Matter of fact, I'm going to start watching for a long to maybe set up in the like the S&Ps, for instance, maybe 34.4 even on the Dow, around, what will that be in the NASDAQ over here, like 577, really close in the S&Ps here, really close, probably 70. 6 or 7, 76 or 7. It's getting really close. And then let's go see if we can find a target. Yeah, that's mid VWAP, 76 and 7's mid VWAP, and then target. It's hard to say because I would like to see, I don't know, this might be a little much to ask for today, actually. I'm kind of light to think up in, let's just say 45, like 01 or something for now. I don't want to try to ask it to do too terribly much for a couple of reasons. And one of which is that the overnight session last night was relatively mild in a 35-point range on relatively low volume. And so there's not a lot of markup or down being done right now in this period of rest, post period of extreme kind of volatility on this uptick. 350, almost 400 points or something like that from the low, and so it's in a rest phase here. But it is resting because we only had about a 35-point range in the overnight on 158, 9, like 160,000 contracts traded in the overnight. So that's relatively mild volume on average range, but average historically, but it's lower than what we've been accustomed to experiencing for a little while now. But it is, that overnight range is indicative of what we tend to find in the RTH to follow. And so let's mark that range. 55 by 97 is, what is that? Basically 45 points. I can't ask it to do a lot more today. It's already essentially mirrored the overnight range. It's not, we can't ask it to do a lot more. So this thing wants to continue to be bullish off this mid VWAP for a bounce. We'd target, we'd have in mind around 4,500. And if it can get any better, we'll see. We'll see about that. Next up would be 45.10, but I don't know. That's asking a lot, to be honest with you, for today. Now, what higher time frame? Let's see what on higher time frame. $618 actually. It's a 618 retrace, 45.30. So I'd be interested in seeing maybe if they can mark it up into like 45.30 tomorrow. That'd be for tomorrow. 45.30 for tomorrow. the low of yesterday hold. We had a higher low in the overnight, which was the low of the overnight, which was at 45. Yesterday's low being lower than that, so it was a higher low. The low of the overnight last night, 45. Got to mark it, got to know it, because what happens when we get in here this morning? It comes in, finds 55 as support, quite north of the overnight low, and proceeds immediately to take out the overnight high. This argues that the low is in for the day. The low, well, it doesn't argue that the absolute low is in for the day, but it argues that we're not going to fall as low as the overnight low. So we've traded in this morning, found, some balance, traded back a bit, just the type of behavior that is quite normal on the heels of an exclusively bullish overnight session. You get a little bit of breather on the open, profit taking, and it stopped north of the overnight low and has since been, trading higher than the overnight high, therefore arguing that the overnight low will not be something that will also trade today. It would take something phenomenal like news, in my opinion, or something to also trade that overnight low. So, there again, phenomenal read on David's part. In the way that traded yesterday, that was a bearish setup for a continuation lower in the overnight that did not happen, did not play out. Fantastic read. Let me get this chat session where I can read it and see it. David poked the voodoo doll. He did. I mean, yeah, he did, Jake. That was a really good call. That read flew in the face of a really good setup that argued strictly for continuation lower in the overnight last night that did not play out. All right, so let's look and see what else we may like and what may be giving us some problems. Coffee. But what is working, net gas, what is giving us a little, that's costing me about $1,100-$1,200 a day, coffee. But we'll get to that in a minute. So in the equity complex, I think we pretty well just discussed that, except that I would like to add one thing to the discussion on that equity deal, and that is that as we may very well move higher tomorrow. By the way, yesterday, Wednesday, was that midweek shuffle low for that pullback yesterday. That was interesting. Well, something we also want to keep in mind because it does help. Don't chase Wednesday. That's the thing. Strength or weakness, whichever it may be, don't chase it. So we're getting some uptick here today, and should it continue to follow through, which is what it looks like, should it continue to do that, then I would be looking for that 45.30 level in the S&Ps on the top on the futures. The reason for that is that if you drop a fib from the all-time high to the bottom of the break, you'll find that to be a 618 retrace, and so I'd be looking at target. I'd be trying to strive for a 45.30 level. Not today. It's too much to ask today. I don't think it's reasonable today because of the overnight range, and the mild nature of the participation in the overnight last night does not lead us to believe that there is a high focus kind of concentration on markup or down right now, but more rest on the heels of the fantastic move off of the lows on the March, expiration. So that's the read on the equity. The thing that I wanted to add to that, though, is this. Remember that next week is end of quarter. And with that, historically, we had this discussion yesterday, if you were present for the closing session with David, who offered some really insightful discussion on the reasoning behind not just the historical tendency, but the reasoning, kind of the intricacies and works into and why for that historical tendency for price action into that end of quarter. To sum it up, however, end of quarter next week, we would anticipate, as is presented historically accurate, and that would be bearish equity, bullish treasury trade next week. Last 3 to 5 days of the quarter, they say, is like bearish equity, bullish treasury. And if you're interested and were not present yesterday, you can refer to the archived session from yesterday and listen to David's kind of insight as to how he picked that apart. And it was really interesting, including like target funds and that kind of thing, and the way that works and why. The summary, though, is to be on guard for bearish equity price action next week and Treasury price action next week. Wherein then the week after that, which is the first week of April, we would flip that position, reverse that position to long equity, short Treasury the first week of April. Okay. So let's have in mind target for right now. I'd say ideally this works into tomorrow, 45.30, if we get it right on the futures, not the cash, but the futures. And that would, we'll see if it can get there. I don't know, but that's my target. And after that, we go into a bearish next week, workly. So I'll be on ready alert for that. And we'll take it one day at a time. All right. Dollar still appears bullish for now. Remember, voodoo line up at 99.60, and if it hits that, and I kind of suspect it will, then I would also very much expect that it will fade off of that level and come back in, because those two things: one, those voodoo levels are absolutely incredible, and two, the dollar really responds most accurately to those primary voodoo lines, especially that fire line, which is waiting up there at about 99.6. And that is something to know, because that will have an impact elsewhere, namely treasuries, gold, euro, etc. So we have a setup here on the bonds from a level, one of those old quarter prints at 148. That's a level, and then two, we have an equal and opposite, and it has not yet triggered. I anticipate that when this does trigger, it will probably be early next week on Monday. Trigger is breach of the high, range high of those two, and that would fire off an uptick in the treasuries for next week. So let's be ready for that. And if it does, then it's got room for a couple of points or something to uptick. I mean, it came from 160 all the way to 148. That's 12 points with no answer all the way down. So certainly it could bounce a few points. I mean, pretty easily, I would think 154 or something like that. Same setup in the notes. Not same setup. I don't guess it's really a perfect equal and opposite. It's really kind of a outside range reversal, really is what it is. But breach of the high there in the notes, I'd say Monday. But that would fire off the notes up on a long as well. And while that's working, you would very much anticipate that the euro would be on an uptick with that, with the dollar kind of rolling, coming back in. While that's working, we would also anticipate that this very same setup in gold, which is this next chart here, also same equal and opposite discussed yesterday, in that we would anticipate that today this could fire off long, and that it'll probably work. It'll work for a few days. So anybody's interested in that, you know, you got your opportunity today. We discussed it yesterday. It looks like it's starting to kind of work a little bit here today. It's up, what, $25? It probably works for a few days. I am not in that. And the reason I'm not in that is discussed yesterday. I am waiting for this to ultimately roll and come back in and give me a better entry. And my idea for that, I don't know. I may miss it. I don't know. But my idea for that is 1880, and or maybe even a little bit lower, but 1880. That's my line in the sand right there. I want to see that, and I'll very much be interested in participating. Long gold target above 2100, but from lower, I miss it. So I could miss it. I don't know. You know, I'm guilty of missing a little bit of this nat gas, and so who knows? Maybe I miss it on the gold, but that's what I'm looking for. And it tends to work its way in concert, kind of a positive correlation with the bond, note, euro, gold all together, inverse dollar, but yet correlated positively bond, note, gold, euro. And so with that down tick in equity, uptick in treasury next week. We'd be looking for uptick in gold. I'm just going to watch it, let it play out, and get the opportunity when it does maybe pull back into a level that I like, which is 1880. Nat gas is continuing to work, which is good. What we've done here, of course, as you know, we've got a little bit of exposure in the form of some UNG and sold those oil puts yesterday, cash cover puts, and they're working today. What I don't have yet, though, is any retracement here to add long calls. I don't have that. And who knows, man, the way it's moving, I may just miss out on the long calls, holding at this point only UNG and short puts on oil. So if it pulls back, I'll be willing to add long calls. But I don't want to chase with long calls and then be in the death march to expiration while it's in pullback, and and I don't want to do that. I'd add the long calls on pullback, and if it pulls back, but right now it's not, so we're experiencing just small positioning with current, very much anticipated, absolutely firmly anticipated continuation of further uptick in that gas, and wherein we had originally only the idea of a weather event into April, which is still in front of us and still very much the case for the original idea for long nat gas. We also are adding to that what Law is saying now about the European need for some of this as well. And this, if this is to come to fruition, like we're talking about, oh man, nat gas is going a lot higher than what, if that's the case, it's going a lot higher than about originally. I mean, originally we were talking about just poking up to a new high here, a new high right there, poking into like maybe $6. No, I mean it's already approaching the old high here, and we don't even have the weather event yet, right? So so here's the take on that for anybody that because we got a live cast going right now, so some folks that are listening, I can't even see if there's questions from some folks that are listening that so I'm trying to be kind of extra sort of helpful and descriptive here. Much of this, obviously, the futures room members already know a lot of this, but what I'm pointing to here is that we originally had the idea that we were looking for this uptick into an April weather event, and that's still the case. Where we're talking now about this being further need actually, and that extending out into like a European demand for U.S. LNG export, then that takes us out way past April into much longer duration out toward, oh man, I mean, poking up to like $6. That's where we're at on that. Meats, I still like the meats, the feeder cattle first, then and there's a setup in live cattle. Although if there's a setup in live cattle and you like feeder cattle more, than just do feeder, right? But there's and then you go, well, wait a minute, I don't necessarily like to trade, feeder cattle futures. Well, then there's equity tickers that I can all look at one of those right now with you if you want. We can make a case for two of them. I'll show you the first one I like the least first, and that would be Cal. Got a proposed entry here for you in Cal, about, I'll say $39. I mean, maybe it doesn't quite get that cheap, but around 39 on that one. And for new highs move up there above 42. And then this is the one I actually like more, and this is MOO, And I like this one because it's working above 100. And with that, I like to employ the rule of 10, which would take it to target 110, to psychological thing. Not that I've got fib measurement or anything up there, but psych level rule of 10, above 200 goes 220, above, that type thing, right? So we're targeting 110. What I see a lot happen here is the 100 breaches, it goes into about 105, comes back to check the 100, and then the move at 110. So with this, I'd be back in at about 99 and something like, 99 and call it, 40, 99, 40, something like that. Buy limit, set an alert, buy limit, idea, entry, long on MOO, target 110. The trade here is into 110, goes to 15, comes back to check the 100, up to 110. And that's a way to participate in the meets as a whole, rather than, just trying to pick like, I'll do GF, or FC, depending on what platform you're in. Feeder cattle and TOS, I believe, is GF, and then like TradeStation is FC. It's like the bonds. They're US and TradeStation and ZB and TOS, so you have to kind of keep up with. Just find the ticker, but if you want the futures, then it's feeder cattle futures, live cattle futures, and lean hogs also. Ideally, we get maybe a little break in the hogs to buy, target, well, new high. I mean, I put them up around 120 or something, but definitely new high on the hogs. Coca we still like. I'm going to continue to like it, holding it, not going to change that, only add to it and continue to like that for higher. That's a long play, though. You're out 12 plus months on this, so that's like a buy it and hold it kind of thing. Just, like it, love it, keep it, hold it. Crude, I think we can continue to like crude, but I don't necessarily want to mess with it from like this level, right? Because the last trade idea that we had on these old quarter prints was 108 up to 115, liquidate 115, let it pull back. Question now is, how far does it pull back? At least the half back of this move, which would put it back into like 111, and from there we could target up into, next target up would be 120. That's actually 119.4. Actually, it's not 120, it's 119.4 is what it really is. So from there, I would have you to, especially those that are listening in the live cast or whatever, go ahead and mark an alert at 119.4 to anticipate ahead of time the very same kind of price action that we're seeing right here at these 115s. These are old historical, very important levels from prior historical trade. Obviously, at $120, it goes back a long ways, right? So this is quite far back in history, but you can see how the market responds to these levels, right? I mean, it comes into all of these. I mean, every one of them comes up first into 98.5 and backs off before it trades up, and every one of these has been reflective. So what last was 108 up to 115, liquidate 115s, let them pull back, mark a spot, trade them up to 119.4, anticipate the same kind of price reaction at 119.4 that we're getting at 115, which is to come in, reflect, pull back at that point, probably to 115, and then we'll see about an additional up from there. Possible, we'll see, but that would be a stair step kind of approach, right? 108s, 15s pulls back, 120s pulls back, 15 trades up if it does. If so, we'll find a spot. And when it does pull back from up there, it would be back to 120 for that kind of stair step sort of thing. Good thing is to have the levels and have a plan beforehand, so you know what we're looking for. And then finally, this is the last thing on here. And then finally on the beans, corn, wheat on the ag space here. Don't touch them. Just don't touch them. Not right now. I mean, just, unless you are the highest of absolute risk tolerance and you can't stand not to be in something, then don't touch them. Okay. Today is Thursday, March 24. Next Thursday, 7 days from today, we get an annual report. That's how important it is. We get crop progress reports all the time, but we get an annual report next Thursday that is the planned acreage, kind of planting intentions. And who knows what that's going to be? I don't know. I used the joke the other day that I don't have the Clarence Beeks report. I told Scott that, and Scott's, most everybody knows, my office mate. He's like, Scott says, "What's the Clarence Beeks report?" I was like, "Dude, you gotta be kidding me." But this is a guy that that slings around millions and millions of dollars, and so he's not on what a Beeks report is or whatever. But that was kind of a joke, right? And he's not one to really joke. The deal is here. It's going to be planned like acreage, planting. And can you just imagine? I don't know what it's going to do. Nobody knows what it's going to do, right? But can you imagine what kind of acreage you're going to see planned for planting when you're talking about $17 beans? I don't know either, but I would say my anticipation would be as much dirt as you could possibly find, right? I mean, they plant $8 beans. Don't you know they're going to plant $17 beans? They plant $4 corn. How much corn do you think they're going to plant when it's $8? Answer everything you can possibly get in the dirt. So it would not at all surprise me. In fact, it is my thought process that these come in next Thursday, in a meaningful way, and we'd buy that dip. But you don't touch them today. Why would you touch $17 beans if you think you can maybe get them at 15 half? Or maybe 15, but 15 half. Why would you buy $8 corn when you think, well, there's very, very much possibility that we could get them for like $6.80? And that's where I would think we could get them. And why would you buy, almost $11, $12 wheat when next week we could maybe get this at $9? So that's my thought. Don't touch them. We'll have opportunity next week, but right now is not the time. So just leave it alone on that. And if you go past that warning, then you're obviously the risk on type that just you got your own plan anyway, right? So now this one's not cooperating, but I will say this about the cough chart. I'm not giving up on it. I am in it. It's costing me, last I checked this morning, about $1,200 right now today. And I'm not giving up on it. I could be wrong, like idea, anywhere, anytime, but the idea for this is that these coffee futures are going to find their way out of this hole. And as a matter of fact, I got to see if I can find it in my email. I got something that was sent to me. Let's see if I can find it. In my email, I was sent an article, a Bloomberg article on coffee and some of the things that are going on there with regard to like the fertilizer costs, and it was bullish for coffee. Let me get you a copy of the article. All right, here we go. I also want to give you another something to look at as well, but let's see, Control D for paste. All right, so that I don't know, Tom, if you're listening, McDougall, who sent me that, I do appreciate that article very much. And then also, I want to highlight another that I think is very much worth to plan for what's possibly lies ahead, which is trouble in the equity complex. I'll give you this as well. And here's the link for that. All right. Take a minute. It's worth your time. Read this. Also, you can click on this link right here and listen to Ira Harris, who is a sharp as a tack, former CME director, very well versed. And he's discussing with a lady whom I also found to be quite well in tune and very well versed. Some of their fears of what very much their fears of what lies ahead when we get into around mid-year. And so we got plenty of time, but you want to know this in advance, right? So you can just take a minute to read this and then take about 30 minutes actually to listen to that podcast. It's worth your time. Even if you put it on hold until tonight, to look at it tonight or something. All right, back to a coffee. So my plan for this is going to be, and I know it looks crazy right now, but this is my plan. The plan for this is going to be a 280 target in the coffee futures. I'm actually in this via JO, which is the coffee ETF. This price right down here at 220 is equivalent to about $60 in JO. The high right there was about $70 in JO. That 260 price in coffee. So the 220 price right down here is about a $60 JO. And I'm looking for a trade out of the hole here that worked its way up into around 280. Now, if that works, then JO is going to be from 60. It should be about $75. So I do have to admit that there is very much a very important line in the sand right here on these lows at 220. I'm not going to worry about any one particular day that happens to close below 220, but I will be fearful of a weekly close below 220. Hear me? If today happens to reach down and manages to close below 220, that would not scare me out of this trade. But this $60 JO, I'm looking for trade to 75 target. 220 coffee, I'm looking for trade to 280. And as always, we shall see. But that's the trade. So things that that I'm very much in favor of right now. I like the nat gas. I like the coffee. I like the meats. I like rice. I do not right now like beans, corn, and wheat. I will, but only from lower. And the idea will be here on beans, corn, and wheat. If we can get this done, it's going to be a hold into mid to end of July. About end of July. But targets for this will only be like $8 corn, $17, maybe $18 beans, $13 wheat, that kind of thing. So we need to get them done from lower, because there's no way I want to buy corn at 7.5 when my target's going to be like 8, or $17 beans when my target's going to be 18. It doesn't make any sense. It's just not worth it. Besides that, we're getting an equal opposite setup on the daily chart here in the beans that's bearish anyway. And you got to throw over top in corn right there, which is a bearish setup. And the same for wheat, which is a little throw over top, which is actually an immediate time frame bearish setup in the wheat right now. So I wouldn't touch them right now. Lower is the only play, and that's it on those. All right, that's probably. And if you want, a couple of the ag tickers that you want to do outside of like just grabbing onto beans or corn or something like that, you want to go into something else that's, just get a basket essentially of it, then it would be one could be this BCX or DBA. I really like DBA. This would be like cow and moo. Go least liked first, and then we'll go to the most liked in just a minute. But BCX, I bid this, as you know, I had working orders for a while on goodwill cancel limits at 975 and 950. They did not fill. It wasn't like I was trying to be a little pecker, something, pennies pinching something for a tick or anything like that. I just had a good till cancel working order to buy the thing, and then I turned my attention away from it. It did not fill. That's all. It just didn't fill, and traded away. And I look at it, and it's up, up at like 10, and I'm like, oh, I guess I missed that. So that's all. But now trace, I'd say, like 10 quarter or something on the BCX while the beans and corn come in like, next week. And then the other would be, and this is actually more preferred, this DBA from, that's probably about right there at like 21 1/4, right in there, that we get. That's a bearish setup for right now too. That's a high for the move on selling. That's bearish setup that triggered short here as of today. So let it come in a bit. Let it come back into like 21, back in there, and we'll look at that as a long that will have the same type of plan on this as we're talking beans, corn, and wheat, and that will be to get this and hold it into, call it end of July. All right, so that's a couple of tickers that we can use in equity like ETFs instead of like going into, if you don't feel like the risk of having a $50% risk exposure in beans, corn, and wheat, then you can go out and do it a little bit more palatable risk tolerance on something like one of those ETFs. That's all. Same thing with nat gas. You got nat gas futures, which could make you go bankrupt overnight if you get on the wrong side of that. And but then there's UNG, right? So we go UNG. Hey, I mean that's easy, It's a lot easier to hold than nat gas futures. You can do options on UNG, and then if you like a little bit more risk than that, you go to BOIL, BOIL, and that's a leveraged, nat gas ETF. So, and it's long, so long BOIL, long nat gas. There's an inverse, but I won't even get into that unless you wanted to. Only if you wanted to invert it, then there's an inverse. It's cold, but I don't think you'd want to do that. You'd only short that. You wouldn't buy that. So, Tom says, I have profit on ZW. Why would you expect it to go down? I don't know that it will go down. Who asked Tom? But I do know that there is tremendous risk in that it could very well possibly do exactly that. All right. And the reason for that is the report that's out next week. So if you're long in it and you've got profits in it, that's good. You would want to be ready for the very high probability, in my opinion, volatility event next week on Thursday, 11 o'clock in the morning, that could very well have this come in on you before bouncing back. So my preferred play, Tom, and we like this. We liked this when it was down here at $8, and a lot of people did really well on this as it went limit up like 5 in a row all the way into darn near $14. I mean, we had a really good time with that. But the first day that it did not open limit up, that was the high. The first day it did not open limit up, it was the opportunity for those that were trapped to actually, start to for, to get out and it start to come back. So like if you're in this, you got to imagine if you're in this from down here on this, like this day with that day right there on, what was that date? The 225, that was limit down. And then from there, it was limit up, like 5 in a row, something crazy. It was just nuts, right? So some people were very much caught short in that, and they couldn't get out. You can't get out if it's limit up. You can't get out. There's no getting out. And if it opens up limit again the next day, you still can't get out. And then it opened up limit again the next day, and you still can't get out. So what do you do in that situation? I mean, you're just going broke. Or what I think a lot of folks did, they flipped over and bought another wheat, like a Casey winter wheat or something. But you buy another wheat to hedge the fact that you're trapped short in this thing while it's going up. Now, thankfully, we weren't short; we were long, and it was going up nicely, and folks made quite nicely on it. Since then, though, the first day it did not open limit up. It's been pulling back since. That leaves averages all the way back here at like 9.5, maybe $9, but certainly 9.5, right? And it's 11 now. So I'm talking about another $1.50, maybe $2, but at least another $1.50 in room for it to come back and just touch off on averages. So when that planting intentions report comes out next Thursday, and if it does yield kind of bearish in ample acreage, i.e. planned ample yield, then does call these prices back for a volatility event, I can certainly see where it would affect this one as well, just bringing it in on that report. From there, though, Tom, very bullish. From there, very bullish. Targets would be about $13. There again, why would I buy wheat at 12 for 13 when I'm thinking I've got an event in front of me that could very well give me the opportunity entry to buy this back at sub 10 for the same target 13? So that's the best answer I've got for you on that. Is basically it's risk, and I'm in a different position than you're in. I'm no longer in this. We did really well with it, but I'm no longer in it. You are. I have to find a new entry. You can hold and put up with additional retracement, whereas if I buy it here with you, I'm underwater immediately when it pulls down, when it pulls back. You're not. You've got a lead. So we're in a different position, you and I, different situation, I guess, you and I, wherein we no longer have a position. And I didn't get out at the high either. I got out like one day before it actually made the high and, came back. It's just luck, really, is all it was. I mean, it was just, who knows, it could have been limit up again the next day and the next day and the next day and kept going. I just was like, this is insane. This is good enough. It's time to just like cash in on this and be happy with it. Let it pull back. We'll find a spot for reentry and try to work it up into that July timeframe. So that's where I'm kind of forced to think in terms of entry, whereas you're not. You're already in. I'm forced to think in terms of where can I afford to get back into this for a planned target. And 12, 13 doesn't make any sense to me if I'm thinking maybe honestly like 9.5 to 13. So and yeah, and if you're not in it, then you're also, if you get in today, you're taking on tremendous risk, in my opinion, in that anything can happen next Thursday. And I'm not one to take on that kind of risk. I'm much more conservative approach than rolling the dice like that. It's just my average kind of approach. All right. What else do we talked about gold, so I don't need to do that right now. Same thing, I would gold here either. I say that, but I think John bought gold yesterday. I don't have the same kind of risk tolerance he does though either. Honestly, yeah, I'll just say it, leave it at that. I don't have the same risk tolerance. I can't handle pullback to the entry area that I like and be long from here in gold. So I just have to wait. So I've got same level, 1880 in gold. It's the same kind of thing that I just showed you in the crude oil from 108 and 115 and those 120 levels. Same thing. 1880 is a historically significant level for gold that I would be more prone to wait for. All right. So look at the clock, 12:22, huh? So we're getting close to 12:30 setup, where at that time we will switch charts and we will go to our 12:30 chart and we will try to come up with a trade based on that chart. That chart will give us proposed entry, stop, and target in about 7 minutes. And so we will prepare for that very idea. Win, lose, or draw. Very same trade we try to pull off every day. Some days it works, some days it doesn't. But we like to try it. Where'd that 77 did bounce? It went to 92. That was kind of nice. The basic idea there was to run that RTH session chart, and with that try to identify the preferred direction and play off of a stacked mid VWAP retracement for continuation of the into and of the preferred direction. So in other words, in this case, we've got first move up, back into mid VWAP, extension, back into mid VWAP, extension, back into mid VWAP, extension. That is a really good setup that requires relatively small risk versus planned objective. That's true. But the problem with this is that you get very few entry opportunities. It requires a lot of patience. On average, I think 3 a day, maybe something like that. Not very many. Not very many. On average, maybe 3 a day. So let me say out loud for the benefit of anybody listening in the live stream thing. I can't see questions, so I don't know if anybody's had a question that I may be unintentionally avoiding / not answering. Reason for that is because I don't see them. Which is also why I answer for some of the futures folks, members, it's why I'm being a little extra descriptive and saying things that you already know. Because I also realized I'm speaking to some audience today that do not know what in the world I'm talking about. We're getting really close, so let me go ahead and switch the chart over for us. Go go ahead and display what it is that we are going to be looking at here together in just a minute. We call this our 1230 chart, as everybody, well, most everybody knows. And what's about to happen here is at 1230, we're going to get a print, a couple of entry levels below, target levels above, and we'll try and figure out how to act on that. All right. 12:27, about 3 minutes out. Now's a good time to take about a 1 minute. You may have 1 minute or 1.5 possibly, if you want to stand up and stretch for a second till we get till this clock hits 30. And we're about to, this thing is going to flash a couple of entry levels and targets for us, which I anticipate being up at 45.012, something like that. Target 45.01, maybe 2, something. Mirror says you got some 77s. Awesome. Somebody else got them too. Let's see. Force, yeah, on the article on, yeah, Force. That IRA article, man, look, here's the thing. For Force mentions about the IRA Harris article. So you can go and find his blog and find the place. I don't know right offhand where it is, but just simply enter your email address. And with that, you'll get every link immediately as it is available from him when he writes. And very often, not every time, but very often, there's also a podcast associated with it as well. Not every time, but quite often. And it's pretty cool to get to hear him talk through, especially he's got another party involved and they're banging ideas around back and forth. And it gets to be quite interesting, honestly. He's a sharp man. Law says who? Ira Harris. I posted Law. Let's see what time. I posted the link for it at look up at 12:07 p.m. Post up at 12:07 p.m. You'll see the link to the blog, but in the blog there's a link to the podcast, and you can listen to both he and this lady who is incredibly sharp. I didn't know about her until just recently, but I found her to be really impressive. I mean, she knows her game. She's on top of things. All right, here's our chart. Here we go. There it is, right there. That's the print. And let's see, what are the entry levels? They're back here at 88. And we might even could get 87, possibly 88 and 87. And we'll try and target. We'll be greedy. I mean, the targets are showing 94, but I'd just soon be greedy and try and target up to 45.01 today. And you can see the target right there at 94, but and that is I guess the proposed target, but I'd just soon be greedy and go for 45.01 today, I guess. Let's see, I've got that one here, 45.01 up there. All right, so let's see. So 88 and 87 is currently at 91. So some of you are already long from a lot lower, and that's good. I'm gonna give it a minute, see if I can get a little closer to the 88 and 7s. I don't want to be too crazy particular because I am talking about target that I want is all the way at 45.01, so I don't want to be too crazy particular about it, but also don't want to chase it. Coop says you follow her on Twitter. I'm gonna have to do that actually. I'm glad you said that. I'm gonna do that very same thing. I'm gonna go find her on Twitter and follow her as well. I appreciate you mentioning that because I'm gonna do the very same thing. Oh, let's see. You say stop. What's a stop? That's a good question. You're right, because I got to give it some. I don't want to be too crazy. Like, let's say 84. And when I do an 84 stop, by the way, I never put a stop on the even print. So I would say the 84 means 83.75. I don't do stops on the even print. 88 is filled. So we get 87 filled here. I'll probably buy 86 also, honestly. So you get 87.
Order filled.
There's 87. And I'll do 86 if I can get it. And I'll do 83.75 stop target. 4501. Aiming for, well, Delta 70, that's not a bad target. What you're talking about right there, that is the target that's on the chart for us. And, you know, I mean, I guess it would make sense. Maybe you could scale one off or there or something like that. But I like the idea that we would have in mind to target up here at 4501. Let me double check that with an IB. Yeah, 4501. Yeah, 4501. I like the idea that maybe we, you know, kind of hold out for a little greed factor. It's being a little greedy, but it can be a little greedy. So if you wanted, you know, like I was saying, you know, what about 93? And yeah, I mean, you know, you could, you know, yeah, you take for scale or something there. First of all, we got to worry about it even working at all. You know what I mean? It's got to work. It's got to work first. Got to worry about not getting stopped out first, but that 4501 up there is the second IB extension, and then another reason to have that target idea in mind also is that we don't know if it'll work, okay, but here's another reason is that you had this nice move to 98 that came in for the mid VWAP test, And so the target idea for that mid VWAP test is for a new high higher than the high that preceded that retracement. And in order to do that, it has to be higher than 98.5 and to have an IB extension there at 4501. So that would be a second reason to have in mind, agreed factor up there. And that is a high was made, came back in for a mid VWAP test, target a higher high than that high, higher than 98. Let's see, what was the question there? Missed your targets, 1230 trade. Yeah, missed targets. Well, the strictest adherence to the 1230 chart, you say, Jake saying, I missed the target ideas for the 12. And Jake, you know, right, because you got chart. I mean, you know, the strictest adherence to the 1230 chart gives you the target, right? And it says 94, 93, 94. However, and that's what it says. I mean, that 93, 94. However, on that look that we were just looking at higher time frame where we're going out further and we're looking at the whole day as a whole, and I'm saying the 98.5 high came back for a VWAP test. The objective for that is to be for a new high, a new higher high. And in order to do that, I have to look higher than 98, and I haven't have an IB up at 01. So I would say, well, I would, try and maybe hang out for the greed factor at like 01. First, we got to worry about it doesn't get stopped out. It could get stopped out. Who knows, man? It gets stopped out. And we don't even have targets to worry about. But let's see if I can find anything else that may be looking interesting. I'm trying to find maybe if there's a NASDAQ level or something, a NASDAQ or a Dow level. I'm trying to think if I could add to this with maybe a little Dow or something. I'm trying to find the spot for the Dow. If somebody likes the Dow more than the S&Ps, like you're like, hey, you just talk about the S&Ps. I like other things. Maybe you like the Dow. 81 buy stop trigger long in the Dow. If it does, right? Hadn't yet. 81 buy stop trigger Dow. I'd use I think 64 stop against that. That's really small. I mean, that's pretty small risk. What is 64 against 81 is like, it's not even 20 ticks. It's less than $100 on a mini and $10 on a micro. And it looks like it's going to, but it would have to hit 81 before it hits 64. If it happens to hit 64 before 81, then that idea is off the table. But as long as it goes 81 first, which it looks like it's going to, then it's a trigger with a 64 stop. I'm not doing it. I'm doing S&Ps. But if anybody wanted the Dow, then that's another way you could try and participate. Well, I say the Dow's going to hit 81, but it sure hasn't yet. $475. What are you going to do about that 81 there, Mr. Dow? What you got? What are you going to do? Wow, I was just talking all confident like it was about to hit 81, but it sure hasn't yet. That's kind of crazy. Until maybe now. No, almost no. It's like, I think I can. I think I can. Maybe this time. That crazy Dow, man. What are you doing? There at 81. All right, so that will have, kind of at least hit 81 before it hit 64. So anybody want to mess around with that, you could. I'm just going to do the S&Ps, but I guess you could do the Dow. So what's it going to be? What you going to do when they come for you? What you going to do? It's a quiet time of day today, isn't it? It's not a lot going on here. 12:30 today. Hey, there's a lot. It's kind of nice. A little bit anyway. So not everybody's got the same risk tolerance, right? I mean, some folks, you don't want as much risk and you want tighter management, I guess, and that's cool. So an idea for more active trade management, if you had an idea of trying to not let something that was once good possibly turn bad, you know what I mean? You could take like a little something off at 93, 3.5. This would just be a way that somebody could more actively manage so that you don't let something good turn bad, right? Okay. So an active approach could be, you could take a little something off there at like 93, 3.5. And if you did, you could bring your stop up to 86 point. I'm torn between quarter and 3/4. 86 quarter is just offering an idea for like an active. I'm not going to do that. Okay, I'm going to give it room, but an active like hey man, I don't want to. I just got this thing going my way. I don't want to turn bad. You can take off and bring the stop up to like 86 quarter, and that way, no matter what happens, it wouldn't turn into like a loss. It's not what I'm going to do, but you could, I guess. Hey, Lauren, can you see if there's any questions that I need to address elsewhere that I can't see? Okay, thank you very much. There are not, and you've been monitoring. Thank you. All right. Well, that's either been really, really, really descriptive and cover every possible, like every potential question, or I'm really boring. It could be either. Probably. I don't know. I hate to think I'm boring, but I guess it could be more boring than that. I could tell jokes. I could play the guitar. I could get the guitar out. We can do that. What commodities select again? Okay, pretty much all of them. What commodities do we like? Really, honestly, like pretty much all of them. Okay, but let's put them in order. All right, so I like some energy stuff. I like definitely nat gas over crude, but both. I definitely like all the meats, but if I ranked them, I would put it feeder cattle, then I guess live cattle, then lean hogs in that order, but the meats. And so you can just do MOO or COW or something like that to get meats. Gold. Definitely think that I like the idea of gold in this, what we are believing to be like inflationary environment that honestly only looks like it's got worse to get before better. So gold. 1880 is a spot to really watch for entry. Long gold, target about $2,300. I'm going to move my stop up E6 quarter in this S&P. Reason being is because I'm about to divert my attention away from the chart and not going to be looking at. I'm going to move the stop up to 86 quarter from 83 quarter up to 86 quarter, 83.75 up to 86 quarter, because I'm going to be looking at what do these charts look like over here. Let's see, what else do we like? I like I believe we still like, I'm pretty sure we still like beans, corn, and wheat, but only from lower levels to watch. Beans, $15 and 65 cents. Corn, $6.85. Wheat, $9.80. No, $9.70. Wheat, $9.70. And those are levels that I would like from lower only. And if you see those lower levels, I can tell you when it's going to be. It's going to be next week, probably on Thursday. That's when you really want to be ready to see those lower levels. Could be starting to pull back in anticipation of that event next week, but those lower levels come in next week. If they come in, they come in next week on Thursday. So What else do we like? I'll tell you a level to really watch copper, and it's going to sound crazy right now, but when it trades there, you won't think I'm so crazy. It's $4.28. Right now, you have to think I've lost my mind. Like, you put down the crazy factor. I don't know that it trades there, but it's worth putting a. That's the yearly pivot. It's worth putting a. It's worth putting an alert at $4.28. Hell, for that matter, put it at $4.29. But it'd be $4.28 in copper. Admittedly, that's crazy right now. Won't be so crazy when it gets there, though. What else? Rice. I don't know of a temperamental kind of. Oh, I don't know of an easy way to do rice though. It's just basically futures. I don't know of another way to do that one. But that's a long and long only, and no discussion other than long only on that one. Or I'm wrong. If it goes down, I'm wrong. But I'm not even talking about down. I'm just talking about if it did, then I'm wrong. But it's long only. I just don't know how to tell you to do that one, though, other than just the futures. Let's see. Coffee. Oh, well, coffee, of course. We discussed that. Coffee. 220 or 280 target, which is there's an ETF that you can do, JO, Cup of Joe. That's the ETF for coffee, Joe, JO. $60, target 75. Weekly close on coffee futures below 220. And okay, I may be wrong, but I'm not getting out of it right just yet. And I'm in it, and it's in my face. It's got me underwater right now. I mean, like I said, I'm down about like $1,200 on it just today. What else? What is Todd saying? No more than once a day, maybe. Oh, being crazy. Yeah. Depeche, what is up? What's up, Depeche? Man, we're trying to have in mind the idea that this thing would be kind to us today and do better than just this little chart target. It hit the chart target, but I'm trying to hold out for more than just the chart target today for a 45.01. Second ID extension up there. That's what I'm trying to hold on for. I'm gonna go ahead and say this out loud for everybody to know what's coming up here. All right, so it is 12:56, right? 4 minutes in front of 1 o'clock. At 1 o'clock, I turn off the mic, and the next presenter comes on. I believe today that is Jack. I think. No, it's not either today on Thursday, is it? Let me look. Hold on, it might be Joe today. If it's Joe, I definitely have a warning for you. Yeah, Joe comes in behind me today. Okay, Joe's on behind me today. So here's the warning, because I do have a warning for you. It's a nice warning too, because I love Joe. But all right, here's the deal. Joe comes loaded for bear. Okay, meaning he's got a loaded gun and he is ready to shoot at moving targets. So my warning would be keep some powder dry for him, because you don't want to be max loaded into anything that I've put you in when Joe is right around the corner behind me in 3 or 4 minutes, because when he comes on, you need some dry powder, which is obviously a very friendly warning. Obviously, I'm being quite complimentary and very nice. I'm just saying that is the thing. So have some dry powder and be ready to fire away here in a couple minutes. Right. It's very possible. I don't know. It's very possible he'll come in and say he's ready to be long himself. I don't know. Maybe he's got a level that he wants to short up here. Possibly. I don't know. If everybody in the futures room knows this. I'm saying for the benefit of those in the live stream, if you like what was going on here and you want to come and join us for regular activity and sessions, whatever, on a day-to-day basis, pay attention here in a minute with Joe, because he can have you quite active, right? And that's a good thing. It's what a lot of people want. They're like, hey, I showed up to trade, man. I'm ready to trade. What's the trade? Well, Joe will have a trade for you. So get ready. That's what I'm saying. Get ready. Get ready to rock and roll. Rock and roll. So looks like I'm going to leave you in a long position with a stop, basically at entry. I mean, your stop would still allow you a couple of ticks loss. You can do with that what you want. If you want to bring it up to entry, fine. I already got it up as tight as I know how to do it, 86 quarter. I don't know how to get any tighter than that. And I'm going to get out of the way. So you have plenty of time to let Joe settle in and see what he's got on deck for you. Okay. Enjoyed it. Thanks for listening and playing along. And I'm going to move off to exit stage left here and listen and see what Joe wants to do. Okay, doke. Enjoyed it. Thank you. Peace. See you tomorrow.
We're a trading community, trading with our own money. Simple as that. If we enter or exit a trade, you'll know how and why we do it.
They're just doing what they say they do. They'll just help you be a better trader.
While secrets are fun, keeping them doesn't help you learn how to trade.
This is a great place to learn and to become an independent trader on your own.
We're so confident you'll value your time here that we're offering a $7 trial. Go on, give it a shot.
Six miles to Chicago. We got a full tank of gas, half a pack of cigarettes. It's dark, and we're wearing sunglasses. Hit it. 1, 2, 1, 2, 3, 4.
All right. Good afternoon, Simpler Trading. Giving this one more try. My name is Joe Roca, the Managing Director of Commodities and Equities here at the Strike Zone and the wonderful Simpler Trading. A special welcome to all of our YouTubers who are watching this broadcast. I am going to be focusing on the futures market for the next hour. I've got you till 2 o'clock, and then of course we've got the big man, the honcho, John, coming on at 2 o'clock. So I'll do my best not to lull you asleep before the main show, but we might have some good stuff here. I will be calling out positions. I'll be calling them out live, and you'll see them on the screen. Just a quick, for those of you who want a little quick tutorial, right here, this is our S&P chart. Okay, so on the left, this is our S&P chart. In the center, we have the NQ, and over here on the right side, we have the CL. Okay. Now, currently, I am, in fact, in a CL position. I'm short a 3-lot from 1392. Now, if you look at my screen, you can see this horizontal blue line. That represents the level in which I am short from. On the left there, -3. That's my position. You can also see it up here in the corner of the chart, -3 at 1392. Below that is the current P&L. Now, that is an open P&L. That's not the total realized P&L in the day, or the total realized being a win or loss, right? That's where the P&L is right now. Those of you who recently jumped into this trade with a 1-lot at 1315, our objective here over the course of the next couple of minutes is going to be to add to this short, okay? And our targets for this short are down here at the bottom of the screen, and they are the horizontal green lines, okay? So our objective, again, is to get short 4 lots and have our first target, or the first lot in which we are buying back here at 1120. Second lot, 1040, 960, 650. And again, the handle on this is 100. So we are shorts. We're going to be looking to get short from just above market price. So we're going to look for a little hop, a little pop to the upside, and then we're going to get in and we're going to sell. Okay. As we get short, we will then pull our stop losses in. At the moment, my stop loss is sitting above market at 1475. Now, that's just a temporary hold. Okay. I will more than likely be moving these in closer. But until we get a larger position on, I'm going to keep them where they are. Now, a quick note, in order to avoid a touch of confusion, I have 2 lots on from earlier today. Okay, so again, my position is 3. All right, so my position will be built up to 6 lots. Okay, now I'm in other rooms, and so in addition to doing kind of official trade alerts that I send out and type to everyone, I always share my screen so people can see what I am doing behind the old iron curtain. So if you'd like to piggyback along with some of those optional alerts that I'm not in the room actively calling out, you have the opportunity to do so. Okay. So again, just a note is I will be looking to get short 4 lots in addition to the 2 lots I already have on. So I will be short 6, okay? But I will be getting you folks into a 4-lot trade. Now, a lot of you still have those shorts on from earlier today. So you'll end up with 6 as well, maybe more, maybe less. And again, so our position, I'm going to look to get you into 4. Most of my trades are done with 1 to 4 lots. The average position per trade is 2.5 lots. Okay, the average position per trade is 2.5 lots. All right. So here at 1:07 p.m. Central, we have the NYMEX close in the next 22 minutes and change. All right. So that's why we want to build into this sale position now, so we can take it into the NYMEX close. If there is a big movement in CL between now and the equity close, it will most likely be between now and the NYMEX close, which of course, as I mentioned, closes at 1:30. Thus, we can trade crude at the moment and be able to trade the close of crude. And then at 1:30, depending on how this crude trade goes, if we do build up some risk capital, we'll then move that risk capital over into equities, and we'll be looking at trading the S&P and the NQ. All right. So in the event I was speaking incredibly fast and it made no sense, or in the event it simply made no sense, my apologies. But again, we're looking to simply get short crude oil. Okay, looking to get short crude oil futures. And we'll be looking to exit that position going into the NYMEX at 1:30. Okay, depending on the success or failure of that trade, we will then focus our attention on equities. That said, we might have a little NQ reversal setting up right now here in equities, where we could sell the NQ. I'm not going to put it on right now, I don't think, but the way in which a trade, you know what, I'll do it. I'm okay with it. But I said 1:30. Yeah, 1:30 CT. When the NYMEX closes, 1:30 CT. With the. Anyways, all right. So let me give you an example of how I would call out a live trade. I'm going to put it on because risk. I don't think it's insanely high probability, but I just want to give you an idea of how it goes. So I would say, all right, let's sell the NQ and let's get short. So. Sell one, market price. I'm now short of one lot from 14,659. I am now short of one lot from 14,659. My stop loss on this trade is going to be the high of the day. So let's go ahead and make that 690. Stop loss high of the day, 690. Our target on this trade is going to be 560. Our target on this trade is going to be 560. So if you are new to futures, let me go ahead and P&L that out for you. Actually, strikes owners, let's do this. Strikes owners, let's get in this, and then I'm going to go ahead and close the audio, and please go over to YouTube to get additional commentary. So I'm going to go ahead and type this trade out for everybody. Close up the mic in the strike zone, and then please follow up over on YouTube. All right, so we're going to be selling NQ market price. Our stop loss is going to be the high of the day, 14,690. Our target the VWAP, 14,560. So quite quickly, all right, we sold the one lot in the NASDAQ at 660. We're going to try and buy back 100 points lower and pay 560. So if we bought 14 660s, or excuse me, we sold 14 660s, and then we buy back 14 560s, that'll be 100 points. Each point in the NASDAQ is worth $20. So the 100 points that the market moves times $20 a point would give us a profit of $2,000. Now, if the market moves the other way and we get stopped out, and if we get stopped out at 690 and just sold 660s or 659, so it's within $20, it's going to be 31 points. All right. So if this toggles up against us, we will lose 31 points times $20 a point is 620. So we're risking 620 to make potential profit of 2,000. Giving us a ratio of 0.31 or a ratio of 1 to 3. What does that mean? We're risking $1 to make $3, or we're risking 620 to make 2,000. Okay, I'll type this alert up, send it out to everybody, cancel the feed in strike zone, and then please go over to YouTube. All right. Who's having fun? Sell one and Q at 14, 6, 59. T1, 14, 560. Stop. 14, 690. The signal on this is a reversal, and the risk on this is low because it's, well, I guess we'd say moderate because in reality, low probability trade. Okay. What do I want to do this? All right. All set. All right. So that alert has been typed up and sent out to the mastery, and this alert will now be sent out to the futures room as well. And YouTubers, y'all can see it on the screen. Okay. All right. Now I will go ahead and print up these orders, which is bracket. So the quick way to do this in pretty much any software is to just slap them in above and below market price, and then go to your chart and move them, and just get them in. That way you've got that bracket order in there, and you can worry about the precise price levels down the road. Okay, and down the road as in 10 seconds later, right? It just save you a lot of time and effort if you slap them in and then adjust them either on your charts or even in your dome for that matter. Just get them in and move them. Okay, all right. So this crude oil trade, fortunately or unfortunately, depending on your vantage point, is working. I wanted it to continue popping a bit so we could so we could sell a couple more higher, but so Jake, if you look up at the signal, it is typed in there. So signal, but it's a you asked that at 112. The alert went out at 113. Okay, but yeah, it is a reversal, right? We're selling you the high of the day. Our is the high of the day, and we're looking for it to come back to the middle. Okay. Now, the crude oil trade, again, as a group, our official position is just short of one lot, 13.50. That has dropped about 30 cents. So I'll P&L this out for anyone who's new to futures. So we sold 13.50s up. 100, 13.50, right? That's where we sold the one lot here in crude. Okay, market price, so it's broke, right? We haven't really anything in yet, but its market price is about 113. Let's call it 13.20. We'll always round against. So we got about 30 cents or $0.3, right? So multiply that by 100 to get that 30 cents. Okay, each penny is worth $10. So right now, this trade is up $300. Okay. However, if you have been taking some of those shorts from earlier in the day, no, this is a rebound trade. This is a rebound trade. Had you been taking some of the shorts from earlier on in the day, come on, man. One sec. One quick moment, guys. Then your average, okay. Add one CL market price, add one CL market price, do it now, do it now, do it now. And my fill is $12.99. Okay. Y'all might get a slightly better price. Someone CL market price. Now short 2. Okay. So my fills are going to be someone CL. So fill 1. Someone CL at 113.50. Fill 2. So someone 9. Okay. Now my average short. This is why I wanted to have 4 freaking lots on. Average short is going to be, 13.24. Okay. Now, add another if you want. It's up to you. I can't, it's too low, I think, to be piling into this stuff. Did I have a mistype on the oh, sorry. Yeah, it looks like I had a mistype on the NQ there. Price correction. I'll go ahead and update that. Sorry about that. Thank you for pointing that out. Price correction. So I believe the sell price I gave you was $5.9. It should be $6.95 or $6.59. So excuse me about that. Sorry about that. Oops. Okay, someone in Houston, 9. Okay, for sold. All right. We think a little, and then there goes crude. God bless America. I mean, it's up 1.5K, but I would much rather it be up 3K. We couldn't get that 4 out on, or that 3rd and 4th lot on. I mean, you can still add, because if it dumps, it dumps. But that's personal choice. They're coming out, bud. They're also on the screen from earlier. I did also flash these earlier. Okay. So the 2 targets are going to be, since we only got 2, we're going to go 1040 and 650 on crude. 1040 and 650. Our stop loss is going to be let's go 85. We'll risk $1,000 on this. Keep in mind, if those targets are both hit, which is unlikely to happen right now, our average fill would be, again, if we pay $650 and we pay about $10.50, we'll be paying $8.50, right? So if we sold 13 quarters and we buy $8.50, that's $4.75, right? $4.75 times 1,000 times 2, that's about 10K, right? We're risking 1K to make 10K. I'll do that 7 days a week and twice. So let me get this typed up. If Robert, or Joel's around, could help me, that would be great. But I don't think you are. So that's sell 2 at. So let me get the sale trade worked up, because it's going to be different than what we had hoped. Let's go 65. Stop loss on this is going to be 13.85. So risk 1.1. Mod, rebound, 1310. Okay. All right, so futures room, I will now get this out to you boys and girls. Sell 2, 13 quarter. We'll be buying 1065, 650. But I would like to point out I am operating at a slightly faster pace than usual. So if you're having trouble following along, or again, you're saying, what on earth is this dude talking about? Don't worry. It all becomes much easier over time. Okay. FOMO is real. Oh yeah. So if you had so Stevie, Stevie, did you have 4 on or 4 or 5 on? If you had the 4 on, then yeah, the 1240s. I canceled them. Why did I cancel them? Oh, you had 4 on and you got 1240s. Okay, perfect. Nice job. Nice job. Perfect. I canceled it because it's like I just go market price. What's it trading? I mean, I sold 75, so I'm not going to buy 40s myself. I mean, I could. I'm gonna leave it and see if I can snag an extra 1.2K out of it. All right, NQ's flirting with profitability. Let's see. The swing low there was 630. Again, we sold 660s, 659 to be precise. Swing low was 631 to be precise. So that's 28 points. 28 times 20 is 560. So at one juncture, this trade was up $560. At this juncture, it's up 320. Okay, now all of that doesn't really matter. What we are looking for in the NQ is for our risk to be covered. When our risk is covered, we'll bring that stop loss in to break even, approximately. The level I'm going to give you is going to be 65. It's 14,665. 14,665. So in the event the market breaks, the NQ market breaks, and we get a new swing low, and the market falls below 16,630, then what will the distance between our entry point and market price be? It'll be 30 points. What's risk? 30 points. So our risk will have been covered. We'll bring our stop loss in 30. Okay. From there, we'll have a much looser trail. And we'll actually bring our stop loss into 665, and we'll give it 6 extra points of room. 6 extra points is 6 times 20 or $120. Okay. Now, keep in mind, the NQ and the CL have an inverse correlation. So it is unlikely that both trades work right now. But what's the beauty of this? The NYMEX close is now. The equity close is later, right? So as far as we're concerned, the NQ can flop around for the next 15, 20 minutes. And we don't get stopped out. But the CL breaks. And then when the CL is done breaking after the NYMEX close at 130, give it till about 115 or 145. So 15 minutes after the NYMEX close puts us at 145. After that, then we can say, okay, CL is pretty much done for the day. Let's have that NQ trade work out. We collect $1,000 on that, which is kind of just I don't like to say icing on the cake, but we would use that risk capital for our larger, more valuable CL position. Okay, but it's one then the other. Now, that arguably may have been a bit more information to follow than you would prefer. And one second, folks. Now, I am also on the mic tomorrow for 2 hours and 10 minutes. Tomorrow could be an interesting day. So put your trader cap on tomorrow. And, you know, maybe this evening or this afternoon session here could be a nice preparation for tomorrow. All right, CL, get your kicked and let's bebop and hop lower. All right, so that CL trade is now in the money. Yippee-ki-yay. Lee, if you could maybe ask Joel to send some over if I'm supposed to be on top of that, that would be great. If not, I'll just keep rocking and rolling as is. Okay. So, crude oil. Let's bring those stop losses in. Let's see. Given where we are on the month, I'm inclined to say let's just close one of these out and lock up a grand. We're down on the day. Oh, and I should have let off with this. My apologies for the voice. I lost it this weekend. And what is most unfortunate is I do not have a cool, fun story behind it. In fact, I didn't even go out. Not even to dinner, for that matter. I had a couple of dates with my four-legged friend, yelling at the neighbors to get off my lawn. Up here in the skies, though, I have no lawn. Speaking of, hey, Leo, come say hi to everybody. When Leo hears blues, he knows it's nap time, and he goes off in the other news. It's actually pretty funny. He is in deep REM. Okay, so now, okay, so NYMEX is closed, right? It's 1:31 p.m. 1:31 p.m. You know what? Let me grab a quick cup of hot water. Just give me 1 second. Excuse me, my apologies. Thank you. All right, thank you, Leslie. So both SL and NQ are meandering our way. Now, I would like to close out a one that, well, I am in Chicago, the Windy City. I would like to close out a one lot in crude before the day is out. So for those of you in the futures room and following along on YouTubers, I would look at that 11:15 target. So instead of looking to cover one of your two at 10:40, I would look to cover it at 11:15. So 111 spot 15. Now, if the market does break there, right, with our average sale at 113.20, excuse me, at 113.24, okay, 113.24. Oh, for Pete's sake here, Joseph. All right, 113 and a 113.24. If the market breaks to, that's where we sold, right? If the market breaks to 111.15. That puts us at $2.09. Okay. Or $2,090. But we did it twice. So that's 4.2K. Now, we'd only be buying one, right? So we'd only be locking in half of that, but we'd be locking in 2,000 bucks. Okay. Which I think, given the circumstances, is fair enough. Because even if we did the 1040s, that's only 75 cents. That's 750 bucks. And we still have a one lot on, and this NQ trade's working out. So I'd be willing to sacrifice that 750 bucks to lock something up. Yeah, let's do that. Let's adjust our target. So CLT1, that's going to be 11:15. Okay. Might even be worth it just to pick up one here at the low. Let's see. Now let's give it about 10 minutes. Let's give it till about 145. Why 145? All right, so NYMEX closed at 130, right? There's going to be more volume and more position squaring after the close, and it usually lasts for about 15 minutes. Now, for those of you who have not met me, specifically the YouTubers, again, Joe Roca, started my trading career 15 years ago on the Mercantile Exchange in Manhattan, and I traded oil. So my background is in oil. I traded oil for about 10 years, rather exclusively, quite aggressively. And then over the course of the previous 5 years, started trading equities now that I'm trading independently. But before I was in oil groups, so I traded oil and RBOB and heating oil. Okay. Okay. Here we go. All right, beat it. Filled. Get it filled. All right. That was pretty quick. I will notice I did get a fill with the dog on my lap. All right, so I got filled at 11:45. All right, nice job, guys. All right, so just locked in about 2K open. Good job, everybody. All right, so TL1 filled at 111.45. Lovely, lovely. Winner, chicken dinner. And I'll send that out to both rooms, and we are all set. Okay. NQ trade's working at the moment. All right, so since I got on the mic at 1:01, so 36 minutes ago, we've locked up. Again, our average sale was 113.24, right? We just bought 111.45, so $1.79, which would be 179 pennies, right? Each penny is worth $10, so we locked up 1.8K. At the moment, our NQ trade is 15 points in the money. Each point is worth $20, so $300. Okay. The NQ is breaking. Okay. It's on its low of the day. So we've got the 113.24s we sold versus market price at about, excuse me, the 113.20. Oh, for Pete's sake, Joe. 113.24 minus market price of 111.25 puts us at $199.99, which is 199 pennies. Each penny or each point or each tick is worth $10. So that's 1.9K plus the $300 in the NQ. That's 2.3K. 2.3K open plus the 1,800 close. So right now we're rocking the P&L of 4,000 with a 2 lot in crude and a 1 lot in NQ. So not too shabby, I suppose. Could have been worse. Okay. What do you think, Leo? Leo says buy kibble. Those of you who know David Starr, David Starr took the liberty of letting Leo know that kibble is in fact financially settled, not physically settled. Thus, we are not to take delivery on kibble. And Leo is now very upset with Mr. David Starr. David, if you're around, he asks you to petition the CME to make that a physically settled contract. Leo is unaware of hogs. I'm not going to be telling him that. Because the amount of meat this apartment or this office would require. Wake up one day, Leo did some overnight trading, which he has done before. Made that mistake early on. Okay. All right. Anyways, back to the matter at hand. We like to keep things light. It does not escape me that we are trading real money and real risk in real time. But what I like to really convey to my traders and my friends and the simple community that is that if you're not enjoying yourself and you're not having fun, do something else. Of course, have a kind of at least have some sort of a sense of humor about it. Now, having done this, I will say this: having done this for a really long time, I have developed the ability to remove or to address the psychological aspect of trading in the sense that I'm not going to be overly reactionary to, or reactive, as the case may be, to the market, right? I'm comfortable watching it now, so I would not become lax and chill, and certainly, overly casual about it. I do kind of often present that demeanor. Now, if you go back to the beginning of the broadcast where I was quick, concise, fast, accurate, levels, blah, 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 having and again, this is by no means me trying to be cool. It's quite the opposite. But I just want to say, make sure that you are taking this seriously. You're focusing. You are being active. You're following those, you're following all of the kind of the directives, and, you're on top of your game. Okay. Just a quick note about trading psychology. All of you know that, and that's nothing you haven't heard before, but just a friendly reminder to stay focused, stay serious, but don't take yourself too seriously. Guys. Okay. Least some. Now, thank God I don't own an exchange seat, right? Or, well, you could buy them now, but definitely would not have wanted to buy one when I was down there. I mean, they were going for $3.5 million. And the spread on it was a $3 million spread, David. It was like $3.5 million bid at $6.5 million bid for a NYMEX seat. Can you imagine having spent, say, let's split the difference, $4 million on a NYMEX seat, and then, now it's worth nothing. That would have been about, spend all that, and then the pick. It wasn't that high before this was like 15 years ago. The advantages of having a seat, well, before you couldn't trade without a seat, first and foremost, and then secondly, you can lease a seat now and you get extremely lower rates. And if you trade X amount of size, it pays for itself in like a day. All right, here we go. 1040s. Filled, just paid market price. Beautiful. All right, so this whole crude nonsense is $60,000 with this 6 slot. Now, if I were to take away the extra 75 cents though, because I got in early. So if I had all of my sales in at 13 and a quarter. Well, essentially it would have just been 75 cents times 6 times 10. So it'd be an extra 4.5K. So the 16 would really actually be adjusted to 12. So one thing I would like to point out, like just now, we were 40 bid. The lowest the market traded was 1060. I said, all right, let's go market price and just get a fill, right? And I got 1070. So I gave up $300 to get that fill, right? It's now trading 111.05, right? So 30 cents higher, right? So it was absolutely worth it to pay up $300 because it's now $350 higher, right? What signal was this again? It should say up there. It says it in the thing. It was a rebound trade. So the CL trade was a rebound trade. Let me go ahead and pull up the CL chart so everyone can see it a bit more clearly. Here in crude, Okay. What we're looking for this market to do is here we have the CL market. Each candlestick it's not a time-based candlestick, it's a volume-based candlestick. Each candlestick represents 754 trades. You can see that up here, 754 trades. So every time the market trades 750 times, a new candlestick is formed. Okay. That allows me to look at volume as price over time. Okay. I'm a volume-based trader. All of my systems are based off of volume momentum, so it makes things a bit cleaner. Now, what we were looking to do, there are two rebound setups here in crude. Right, we're looking for the market to break. That's what the trend. Then for it to rally back and get kind of pulled back into the mean. Okay, bounce off that mean or this VWAP, and then to break. Okay, same thing happened over here. That was the setup. Okay, now as I mentioned, right, I wanted it to get a bit higher. We sold one at 1350, and then we sold another at 13 even. Right, so we only got in with two. I wanted to get everyone in with a 4 lot, right, but it didn't go any higher. So as we scaled in, we got one top, and then we got added one on a drop. For us, of course, as it rallies all the way up to that VWAP, we scale in, scale in, scale in, and then the market turns and we cover on the way down. Okay. All right. That was the signal. So for the there who are new to the system and new to futures, that is, of course, a very quick and brief explanation. Now, I've been told I should adjust this. Let's go ahead and do that just to give you guys a bit. Oh, no, not period. Okay. There we go. And then I'll adjust this as well. Fortunately, they did not all get changed when I updated them a while ago. And there we go. It's a bit clearer. Okay. So we're looking for the fast EMA, which is in white, to cross underneath the slow EMA, which is in yellow. When fast crosses under slow, that's a sell signal. Down it goes. When fast crosses over slow, that's a buy signal, and up it goes. And this is a pretty clean example of how it looks. And again, everything is not always this obvious, this smooth, and this easy to do. But when it does work out, having these examples here for you is pretty convenient. Especially for the YouTubers out there who are new. Okay, thoughts on gold? No, not particularly, unfortunately. There's just not. So given the market, it's a good question though, and I did talk about it earlier in a different room, so I can go ahead and recycle that commentary because it's fresh. Right now, gold, in my humble opinion, needs to be traded with a slightly deeper pocketbook than I am comfortable reaching into. And that's because and today was smooth. Today was actually a smooth move, but kind of a smooth move XLX. But if we go back and look at some of these other moves, we just have a lot of volume pushes that would kick us out of a lot of these positions, okay? And we'd get stopped out a lot. And those stop losses really add up because and the reason is because the gold market is so sensitive to FOMC, right? And interest rates and the whole geopolitical sweep. And with everything going on in Asia and Europe, that the gold can really fly around. Now, if you are able to battle that war of attrition and risk small to moderate to make a lot, certainly worth it in the long run, but you really got to stick with it. And I'm not with you guys often enough to give you enough signals to do that. Just so that's kind of a catch-22. That said, what do I think about it right now? So the type of trades you'd be looking for would be, again, small risk, big reward. So right here, if we were going to do a reversal, this is a good setup. Now, it's not with the trend that I like, so I'm not going to do it. But, and the time of day is not terribly spectacular. But if gold, well, you know what the hell? I'll do it one look. If gold falls off this ledge, right, and the fast EMA crosses underneath the slow EMA, we'll look for this to track back to what? To the VWAP, okay? So if we do it with the 2-lot, our first target will be the VWAP, and then our second target will be the low of the day. Now, those are relatively arbitrary. So what we want to do is then look at our HVAs or high volume areas and see if they match up. Now, of course, you do this before you put the trade on. That said, I already knew what they were, so I was comfortable with it, right? So we've got an HVA here at 1955, 53.7. Where's my target? 53.5. Coincidence? I don't think so. Look at that target number 2. I've got that at 1938. Where's this HVA? And it's one of the larger ones on the screen here. So let me adjust the width of these to reflect the weight of these. And you'll see how smooth of a trade this really is. But looking to cover along HVA 1, looking to cover along HVA 2. Let's look at the action today. Looking for along the VWAP, looking to cover along the low of the day. Now, gold's closed, right? So the timing of this trade is not very good. Okay, but if this were in the middle of the day and we were looking for a reversal, right now I have no reason to really think that. Okay, but if we toss our stop loss up at the high of the day, okay, and we end up getting filled on both, we'd buy about 1945s. Okay, so if we sold 1962s and we get out at about 1945, that's 17 points times $100 a point is 1.7K times 2 lots is 3.4K. That's what we're looking at. Okay. Jimmy, the indices that I'm using are on display, and I have increased the NQ up to 754 as well. Okay, I have increased the NQ up to 754 as well. ES is high enough as it is, and let's see, this chart needs to be updated. 754. And there we go. The reason you would increase the volume per candlestick is to decrease the sensitivity or the movements of the EMAs. And so the more volume per candlestick, and the EMA tracks the candlestick, the more volume that is being used to determine the EMA prices, and thus the less sensitive they're going to be because you're doing an average on a larger block of trades, right? So if you look at the 200-day moving average versus the 20-day moving average, obviously the 200-day average is going to be a little smoother and a little flatter. It's the same concept here in the tick charts. Now, this could be a pretty good opportunity to add to your NQ trade. And we'll discuss why, because you're only risking 15 cents or 15 points on this, okay? There we go. All right. All right. So, 1:59. All right. So I do got to go. I got to get out of the way for Mr. John Carter. The man, the myth, the legend is coming up next. So stay tuned. Hopefully you guys enjoyed what you saw. If you want to see more, you know where to find me. Day trade room, futures room, strike zone room, etc. So hopefully we can see you guys there. Thanks to everyone for attending. And lots of love to our simpler folk, and welcome to everyone, of course, from the YouTube community. And we really do hope to see you soon. And from everyone at Simpler Trading and the Strike Zone, my name is Joe Roca. Have yourselves a very profitable day.
We're a trading community, trading with our own money. Simple as that. If we enter or exit a trade, you'll know how and why we do it.
They're just doing what they say they do. You know, they'll just help you be a better trader.
While secrets are fun, keeping them doesn't help you learn how to trade.
This is a great place to learn and to become an independent trader on your own.
We're so confident you'll value your time here that we're offering a $7 trial. Go on, give it a shot.
All right. Hey, everybody. There too. All good to go there. All right. So let's take a look at a couple things. And grenade, that's awesome. So, so let's just kind of look at this market here. I've been watching Google here. Well, first of all, you know, the indexes themselves. Remember on the daily chart here, I mean, we are kind of slamming into that upper Bollinger Band on the NASDAQ. But the fact that we have not been able to take out the low of the high bar right here, you know, and we just kind of keep pushing up, that's going to force short covering in the short term. So it's very possible here that this is silver. And we'll take a look at here at gold too. So one of the ones I've been watching here is just in turn has been Google, just kind of keeping an eye on it. If we're looking at it, you know, from levels and stuff like that, you can see until 28.96. So it's possible in Google, if things really get going, that could be something that we could see into the end of the month. And so I like the trades, and I like this kind of nice bull flag formation that we're getting there, kind of a nice high and tight. You know, we've been so used to seeing anything that's bullish just kind of fall apart that, you know, it's kind of nice to see that's like, you know, there's certainly take a look, squeezes. So we had a 30-minute squeeze earlier. This is kind of fired. We certainly haven't exploded from this level, but the fact that it's this tight, that just, it's very, very bullish. It's just very much kind of a nice base formation. You know, not a lot of volume, of course, right here as we're at the lunch hour. Right now we got an hourly squeeze, and then the 2-day, 3-day, 4-day weekly squeezes. I'm not necessarily those are going to fire, but if we go over here and we look at the hourly squeeze, you can see it's just getting warmed up. And again, that 28.69 kind of a target here. If we can kind of, we got to get through that swing high there. If we look at the daily chart, I believe that is already fired. So that's already fired. So remember, the average squeeze here lasts about 8 to 10 bars. So that one is cruising. That's just started. And then we've got the 2-day, 3-day, 4-day, and the weekly that haven't even started yet. So I like it. You know, again, not looking for, you know, anything beyond a move to about 28.70. See if we can actually get something that is, and in a perfect world, I'd like to hold it, you know, into early next week. All right. All right. Yeah, we're playing this one off of the hourly chart, DH, not the daily. So that's Google. And then we looked at gold. And gold here looks great. I mean, you've got this pretty much of a humongous buy signal on the ready, aim, fire. We had this this explosion up, and kind of this nice rounded bottom here happening. And so the idea here that ultimately we could take this out and go to new highs, I certainly think it's going to happen. I just don't know when. That's, you know, is this something where, you know, based on the monthly squeeze and stuff like that. So right now I'm just kind of looking at, from a trading perspective, can we get back up to this tree line? So that's my target on the futures. And then I would leave on GLD and the futures options for a potentially longer term move there. But that's my plan. I'd be scaling out there. All right, so there we got that. Yeah, so the long puts on the Qs I'm holding on to as a hedge. I may end up having to take those off. You know, it's but in this market, we're up at resistance. So I always have hedges on when we're at resistance. On the Qs, you can see that we have a pretty solid move up here, and we could go to the 200 SMA. So that's still pretty decent ways off, about 10 points. I wouldn't necessarily want to hold on to my hedge all through that. I would want to reestablish. But if we look at spiders, you can see that the spiders, they have already pushed through it, and they're just kind of hanging out there. And they've got a nice daily squeeze there for support. So it may make sense here to actually take the hedge off pretty soon. But remember, it's kind of like in this environment, you know, it's like every day things seem to change. But right now, there's definitely things are supportive. If you guys were in the class, we did the quant pivots class. We had long trade and AVGO. Pretty nice setup here. And even though the squeeze hasn't fired, it hit our target. So classic setup here is squeeze, and then you're just kind of looking for a slam into, in this case, multiple H1 levels. You had weekly and monthly. So it was a beautiful target. Probably, frankly, has more to go because the squeeze hasn't even fired yet. But in this case, it lined up with a snow line. So we just kind of take the money and run on that one. And then what about from there? So ticks here are acting really good into the close as well. So I'm just kind of looking at this as from a trading perspective. What else would we want to look at here from a trading perspective? This is a, you know, trading market, meaning like, let's, you know, you're kind of looking at some momentum into tomorrow, possibly into early next week. Amazon here, a little bit of a dud, and you can see that 200 SMA is just kind of hanging there. It doesn't, you know, that's not horrible. And then Tesla, which has been pretty strong, and of course it's had this amazing move, and it's starting to build up some smaller term squeezes here in the 30-minute and stuff like that too. Yeah, Bitcoin's interesting here. I just don't know. You know, with Bitcoin and all that kind of stuff here, it's just kind of in no man's land. You know, I think it's fine if you're holding it long term, but in terms of a trade, I'm going to pass. Doesn't mean that there's not a trade there. It actually looks pretty good here, but it is below that 200 SMA. I just think there's other things to do here, but it looks great. I mean, it's probably a good trade. My fiance's 61-year-old father just got conscripted into Eastern Ukraine. Wow. That's crazy. It's going to be interesting to see how it plays out this weekend. I mean, I think they're really trying to push and get something going just to kind of shut it down. You know, it's like, let's wrap this up, guys. That's legit. So looking at a couple things here, let's bring, All right, so let's go through here. I want to look at, we looked at gold. We looked at Google, which I like a lot. NVIDIA, someone asked about NVIDIA earlier. This is, of course, crazy move here in NVIDIA. We're kind of petering out here at that weekly H1 level. But look at the volume here. I mean, that's a legitimate move. And then the other semis, you've got LRCX. You know, just an explosion here too. Now, LRCX is already up 20 points on the day, but look at this. Look at this, the coil. Now we don't have a daily squeeze, but we got a 2-hour squeeze. And look at this coil here. So even though 20 points on the day, you might think like, oh my God, you know, that thing's long gone. I think this is a momentum opportunity here. And so if we look at the 2-hour chart, we've got a squeeze just forming. We've got resistance around $560. So that's like $9 away. So if we're just talking like, okay, you know, if we're just talking like some kind of a momentum type trade into next week, you know, that fits the bill pretty good. So if we look at LRCX and just look at, you know, even next week, you know, this isn't a super liquid option. The 550s, which are at the money, are, you could drive a U-boat through that. Again, my target is like 8 or 10 points, so I'm not looking for anything too fantastic. But the idea that we could buy some 550s, I'd want to get maybe we got a little bit more liquidity here. Yeah, it's not super liquid. If they reach a peace deal, should we short commodities? I say absolutely not. I mean, commodities were going way. They remember they were all going up way before the war. All of a sudden, inflation has been blamed on the war, but all that was happening way, way before the war. So no, I don't think so. Remember, there's going to be a lot of disruptions and things like that too. Man, this thing is strung out. It's pretty thin. Any trade on Google? Yeah, I've posted 2 of them. If you scroll up. So that might be a possibility. I love this pattern. Oh man, I can't not trade that. Come back over here. $545, $565. I think that could work. Yeah, I just saw the weed stocks are going. Let me see here. Let me check this. 545, 545, 565, and we can target up at about 560. So that's about a 950-ish debit. Give or take. Yeah. All right, so let me post that. And then I was going to look at 550. All right, 3480. Oh. All right, post. All right. All right, so hopefully that makes sense. So again, just you got this beautiful base here, looking for the squeeze to fire long, and then 560 as a first target, and then 570 is that 200 SMA here on the 2-hour chart. And then if we looked at plus 2 ATR on the daily charts, you know, pretty high up there. So it's got a lot of room to go. So I like that one. And let's see what else. And I don't know. I mean, I like Tesla here, but I don't know. It doesn't really have a, well, it didn't earlier have a clean setup. I love this consolidation here. In terms of squeezes, of course, you know, you got a lot of massive, bigger squeezes setting up here. The ticks at great. Good God. So 30-minute. I'm going to pick up more Google. I'm going to build that up to 15%. Before I do anything else here. All right, 2,800, 2,900. Ah, man. Gotta copy and paste all this stuff. All right, let me post this real quick. You can always go further out. I'm literally looking at this as a trade that, you know, ideally I'd hold on till Tuesday and get out. You know, I'm just kind of targeting this this level right here. Even if I wanted to hold on to it longer, my plan here would be to GTFO and then reload on a pullback. It's funny, Marcus. Okay. Yeah. Now, for you guys in the futures room, I don't know if you got how much you guys are doing options. This is a trade I'm putting on right now on Google. Looking for it to move to 28 to 28.70. If you bought Google versus GOOG versus GOOGL, doesn't matter. No, by habit, I do GOOGL, but they're the same. So if we look at this one, I mean, they move exactly the same. Sometimes they're off by a few dollars, but you can see it's the same, you know, same pattern and stuff like that too. One's just A shares and one's B shares. You know, it's voting class shares. Wow, ticks are amazing here. All right, we're locked and loaded to Google. Yeah, and if it pulls back, I'll hold through it. But yeah, when you get a momentum market, okay, there's a difference between a consolidating market and a momentum market. If you get a momentum market and you wait for pullbacks, you will never get filled on anything. Just kind of like if you never asked a girl out on a date, you'll always be single. You know, it's kind of the same thing in momentum markets. Yeah, I'd be happy if it goes to 28.70, but at this point I'm just kind of like, yeah, I'm playing the momentum, and if there ain't no momentum, I will make like a tree and get out. Okay, so from there, resisting the urge to do anything in Tesla. What if we're still, so if you're still single after asking, that's okay. You keep asking. You only need one yes. Tesla looks great here too, but I don't know, the damn stock. I have not been in sync with this stock, so I feel like if I buy it right here, it'll it'll kill it. I mean, I mean that jokingly, but I like Google, so I'm happy there. Good point. I mean, if you choose to be single, that's fine, or get a dog. Yeah, I actually, the idea of buying Tesla today and selling it on Monday sounds pretty good. Even just basing it off of this 30-minute squeeze. You might get some pinning action at 1,000 tomorrow is the only thing, but it does tend to do well. And then the options on it, of course, are a little nuts. Yeah, just don't marry a dog. Or just don't tell anybody if you do. Wow, man, the Tesla options even for next week, they are so high. Yeah, I'm gonna stick with Google as my kind of big focus trade. All right, so let's see what else we got here. I mean, I'm kind of down with LRCX and Google. I mean, that's pretty good. Let me see what else. I mean, look at this. Even the the dead stocks just can't move. Yeah, those premiums. If one were to play Tesla, what would you look at? Man, I'm just gonna get sucked into this, aren't I? Theoretically, if you were going to do Tesla. So the $1,000 calls that are next week are $41. So the idea here of selling the $1,000 puts that expire tomorrow even for a quicker trade, I kind of like that because these $1,000 puts are, they're $7, but it's certainly not, exciting, right? Which is okay. You don't have to have exciting all the time. What I like on Tesla right now is a move to potentially 1,100. So let me look at an 1,100 butterfly on this. That it just explodes next week. So on something like this, since it's so far out of the money, what I'm wondering is, can we? What does something in $50 wide look like? I mean, that's pretty attractive. $6.23, and that expires next week. And the nice thing about it is that it takes up a lot. It takes up a lot of that butterfly sucks up a lot of that premium, or offsets a lot of that premium. So let's I'm gonna do that. 650 maybe. I don't know if I'll get that. Come on. No? Yes. Okay. This is a butterfly on Tesla that expires next week. Can it go to 1,100? Now remember, butterflies, you take smaller risks because the risk to reward is so nice. So this is just a 3% risk. Because if it works, the multiple is so high. Yeah, so Edris, if it goes down, yeah, that's why you want to have puts. But if we are able to close above, break out, we can take it off. You don't have to hold it, by the way. Just take it off if you don't like it. So I'm 15% long. I'm 15% long Google, 5% long LRCX, 3% long Tesla with 5% puts. So, I mean, that's just called a balanced portfolio. Yeah, the hard ways craps are nice when but they don't hit very much. Got the S&Ps, they're breaking through that 4,500. Yep, still have gold. I like gold. For gold for the futures, I'm just kind of looking for that 1995-ish target. Yeah, and Google, I don't want to do a butterfly on Google. It's just it's a directional trade. The premiums on Tesla are so high that it's like, either Tesla is one of the few stocks where it actually makes sense to buy far out of the money calls just because they're so ridiculous and they actually hold up. As a history major, do you think Putin will not retaliate beyond cyber warfare? I think he's screwed. I think that everyone's going to come together on this one. I think the lessons learned of World War II is like, well, they took Poland. All right. Maybe they're happy now, and it just kept going and going and going, right? And so hopefully the lesson from history there is to put a stop at it, but you just, you never know. When the idea is like when you have committees in charge, if you have a committee in charge of building a horse, you end up with a camel. So that's the only unknown is just it is just the idea of committees being able to do something that's, actually on point. Do you think China will invade Russia? I don't know. So a lot of this stuff is probes. It's like good war. War is probes. And so on something like this, at least, based on history and the military history, is, a country tries something and then they see what happens. And, and again, obviously don't have Putin's ear, but I think he's looking at this going, well, you know what? This isn't quite working the way I thought. And the way out of it is some face-saving resolution. And if they can figure out something where he saves his face, but a cornered rat's going to fight. What do I see propelling higher? The 2-hour squeeze. Yeah, so Tesla, that's why we did a butterfly. That stock has already been insane. I don't want to do a larger directional trade on that because it's so high. Yeah, so if they can allow him to save face, I think I don't know where the dust settles on it, but if he fires a nuke, he kills himself. He hurts a lot of people, but that opens up the door for immediate implosion. There's hints of now that you got NATO out there and Biden's out there, and now there's already hints of they're trying to find some solutions and stuff like that. So, oh, I know what I want to look at. So, GameStop. The K95 mask. Oh yeah, let's look at FANG. So for FANG, what I'm looking for is to see if it can get up to 148. We've slammed into H1 here, consolidating, and And yeah, this one, where are we on that one? Yeah, you know, what do we got about on that? About not a lot of. Yeah, let's go ahead and book gains on Fang here. Like I said, I wanted to see if we're here at H1, if we could get another squeeze here, that could be enough to get us going. Crude oil here, kind of taking a breather. So let's go ahead and just book this one. I mean, it was a pretty easy trade, mostly. Small, just a small gain. Yeah, let's take a look at silver here. If there is a resolution of war, will gold fall back hard? No, gold is moving for a lot of different reasons other than war. Yeah, nice move there in silver. When as part of the sanctions, when part of the sanctions became freezing FX reserves, all of a sudden it used to be that the US bond market was a neutral backer of the US dollar. That is no longer the case. So now all $12 trillion in foreign reserves are at risk. Like, you know, oh, okay, yeah, Putin did something bad. Let's freeze his stuff. But the problem is, what is bad? You know, does the sliding, is that a sliding scale? Like, oh, you ran a stop sign, we're going to freeze your foreign reserves. Gold suddenly is front and center as the only neutral counterparty now. Yeah, so silver here is, you know, you think of it as just kind of following gold, but man, you got a nice slingshot action here. You do have this fire line that you have to bust through, but this is a great signal. You know, you do have a daily squeeze here on silver as well. And if you're looking at targets on this, definitely, you know, these two snow lines here, 27.83, 28.83. I prefer gold. Silver is kind of a heartbreaker. You know, it looks like it's going to go and then it just kind of stops. I love this pattern on gold. And then for the futures, my target here is, you know, just a little bit under this tree line. Futures, I look at futures as you try to catch kind of the easy move, and then you hold on to GLD, and then calls on, you know, calls on that for a little bit more if you can get it. Oh, that makes sense, Corey. Yeah, okay. All right, let's take a look here. Let's kind of see how things are lining up here into the close. Okay, so the main thing for Google that we want to see is that it needs to, especially if it can close above this high right here, then it's kind of got some blue space territory. If we look at this 30-minute chart of Google, so that high is around what, 28, 21 and a half. So we're about what, $3 below that. So if we can push up through this high, and you can see we just tested it, and then you got an easy move to the 1272 extension. But what I'm really intrigued by is that the 1618 extension lines up with H1. So that's my target on this trade. Yeah, this whole situation with Russia, there's a one of my favorite books is Shogun. I think I might have been talking about yesterday with James Clavell. And if you've never read it, I mean, it's probably, you know, in terms of novels and historical fiction and learning useful things like life lessons, it's, if not number one, number two on my list of books. And the main character in there, he had a saying, he's like, man, this is a turd stuffed fornicator. I love that saying. And, you know, the situation with Ukraine and Russia is a turd stuffed fornicator. But it's great because you learn, the book teaches you strategy, life philosophy, how to be at peace when you're in the middle of a shitstorm. I mean, it's such an amazing book. It's 1,200 pages, but you got to get through the first 300 pages to get into it. That's the downside. And then from there, the rest of the Asia saga, you have Taipan, King Rat, and Noble House. Noble House is like a 1,700 page book, and I've read that one a couple times too. It's got 70 different plot lines, but it's really good. Well, how the market's going to react? Well, I mean, at this point, remember the markets get weird when there's a surprise. Okay, so Russia invading was a surprise to some, but now that it's happening, it's normal. So, you know, what if they keep fighting? Well, that's not new information. I want to be clear. I don't think that the market has bottomed and we're all going to hold hands and watch the market rally to new highs. I don't think so in any way, shape, or form. I do think that, let's look at the cues here. So if we look at like a daily chart of the cues here, so the cues you can see are just kind of slamming into all these key levels here. This is why, you know, I want to have a hedge on it. So, you know, the question is where does this kind of peter out? And if we are able to break through this, then we've got, you know, really the snow line up here lines up with a huge amount of resistance and supply. So it's possible we spike up to this. You know, obviously I don't know for sure. But from here, I do look for a rollover. So timing wise, probably, you know, let's call, you know, April 3rd, 4th, 5th. And then remember, this is what these markets do. They kind of, I think I've posted this before, they tend to bottom out around the 20th, you know, give or take, and then kind of rally into the 5th, fell off the next month into the 20th, and then rally into the 5th. Now that's obviously very general, but this has happened like the last 7 out of the last 9 months. So, you know, after you get through about the first week of the new month, you kind of see selling pressure, and then, you know, that's something that we've just been following. You know, you sell off, get the bounce, sell off, get the bounce, you know, sell off, get the bounce. And you know, this rally has started a little sooner than that, but this has been a cycle that's happened 7 out of the last 9 months, and a couple times I've been out of sync with this cycle. It's to my detriment, and it's just making sure it's like, okay, where are we in this normal kind of money flow cycle? Yeah, and it's like yeah, that's actually a good point. So you get like, yeah, different phases out there. Yeah, we were just looking at coin. Bitcoin looks solid here. The only thing I don't like about it is that it's trading below its 200 SMA. So it just kind of, I mean, look, that's a great move there. And so maybe this thing is about to bust out. But the thing is, I don't trade Bitcoin. Like I own it, but I don't like trade in and out of it. But it looks like it's giving it the college try here. I mean, it pushed up here, we came up again, but there was no squeezes. This time it has one. So, something like Mara or something like this is going to benefit. Yeah, that's a good point, GB. The quarter end, you got the quarter end window dressing. What's going to be interesting too is at the end of this quarter, remember there's the reshuffling of hedges. Typically that pushes the market down the last day of the month or two. And then you have, net, are there going to be inflows or outflows? Sometimes when you have a big rally like this, you'll get, 10, $15 billion in outflows at the end of the month. So you get some weird stuff. In a perfect world, Google would, follow the plan and move up way before the end of the month or way before the 31st. Yeah, so for TLT, this is kind of the whole idea here that bonds as a safe haven are over. As that can be reflected here. So, are these a buy? One school of thought, and I actually abide by this to an extent, is that ultimately high interest rates are a fantasy, and then at some point bonds will have to go higher again. The only unknown here, though, is that if FX reserves can be seized or frozen or sanctioned, which never before in the history of the world has that happened, except the last couple of weeks, then that brings into question the $12 trillion that are in FX reserves. How comfortable are they owning U.S. bonds? So I think that's a big deal, and I think there's just got to be a little bit of there's going to be some fallout from that for sure. I mean, it's a legitimate question. Where else would they go? One of the biggest things is there's been a record amount of gold repatriated from the U.S. A lot of countries let the U.S. hold it because, if they get invaded, they're taking it all back. Man, Google looks horrible here. If you're new to the room, one of the things we always do is that if there is a trade that's working, that looks good and it's working out, never cheer it on. If you cheer it on, it'll hear you, and then it'll do the opposite. So instead, we just say, man, what a piece of crap. Why would anybody in their right mind buy that stock? Yeah, do not anger the market gods. All right, let me do future. Okay, it looks like this is back. It looks like I just got hit with some sunspots. All right, so it's 2:48. I actually want to look at the NASDAQ here. I mean, frankly, just for continued rally here into the close, or the S&Ps. S&P is also pretty strong. MOC is pretty lame. Market on close order, so there's really nothing much to do there. Though if we buy the NASDAQ futures, maybe that'll help goose Google. MOC just means market on close. There are some, market on close orders bundled up. You think about an SPX Iron Condor for tomorrow, about 4,500. I like it. I mean, I like where you're going with that. I just think that I think the risk here is to the upside, frankly. If we look at Google and the S&Ps, we're above the 200. And let me see where we are just from a fib retracement. All right, let me. I gotta buy some. She's gonna blow, Jim. That was the worst accent ever. Captain, she's gonna blow. I've been watching. I'm a Star Trek fan. I love the Next Generation. I guess that's the only Star Trek I really watch. But I've been watching the new one, Picard, and the only reason I've been watching it is to offset Yellow Jackets, because Yellow Jackets is such an insane show. Like after every episode, you feel like you have to take a shower. And so alternating it with Picard is nice because I can't even. Yeah, I can't even imagine. I'm dying to find out what happens. All right. Right. I just gotta get this out there. Just looking for continued strength here into the close. I'm just looking to scalp NASDAQ futures long here. I'm not going to hold them overnight, just FYI. We've already got Google. All right, Google's taken out that swing high. That bodes well. So you can see here from a voodoo perspective, there's no major resistance till 2,900 again. I'm only looking for 2,870. I'm not even being greedy. What I'm curious though is any retracement from here to here. All right, so we're at the 618 retracement on Google here. So look, if we get through that, which I mean, this is horrible. Why would anybody do this? If for some reason we get through it though, the 786 and the snow line up at 2905, and again, keep in mind I'm just looking for 2870. Brad, don't say shit like that. If you're in the futures room, Brad was like I mean, I'm joking with you, right? All right, let's see what we got here. Close. Yeah, there you go. Yes. Yeah. yeah, Google is 2750, obviously. I'm keeping look. I'm keeping the QQQ hedge on because if tomorrow the Nasdaq's down 300, you know, that will not be fun. So that's what a hedge is for. Yeah, I think I've been written up by HR 7 times now, but they're trying to draw straws on who gives me the reports. That's funny, Mandy. Yeah, so there's not a lot to do here, obviously, in the last 6 minutes. Could I get fired? Theoretically, I mean, anything can happen. Let's see here. No, it's good. I mean, yeah. I mean, I do still own a quarter, 25% of the company, and you know, it's one obviously that I started and I'm very passionate about it and love it. And what's great is that, you know, behind the scenes we are getting some tech stuff in place that's going to make, I think, everybody's lives a lot easier, which will be awesome. Just stuff that we weren't able to do on our own. That is true. The kangaroos could take me out. Yeah, Tilray, I should trade Tilray, but it owes me so much money from last year. It's intimidating. Well, you ever have an option to manage money. So here's the thing is that you can do stuff like what we're doing here, where we're just kind of trading our accounts and showing you what we're doing, or you can manage money, but you can't do both. So you kind of have to, you know, you have to pick a path. Although I think the in between is, you know, you like some auto trading. There's auto trading things where, you know, things could just be automatically traded. And compliance is a total nightmare. Yeah, this is fun. I mean, it's just like, it's more, the whole idea in starting this was, okay, as traders, most of us are by ourselves, and we know, it's kind of, you kind of live in a, you know, what's the term I'm thinking of? An echo chamber, because you don't have anybody to talk to. So what I like about this is it's a community of traders. You know, we all talk together, and you know, and it's great when trades work out. Obviously, it's great for everyone. And if I do something stupid, people let me know, and that's part of trading. I mean, it's not, you know, it's a team effort. It's not like and that's, you know, you never know. And the markets are great because you never know exactly what the market's going to do. Although some days, you know, I would love to get a mulligan once a quarter. You know, you could just go relive that one day. Yeah, no, I enjoy this. This is fun. Oh my gosh, Tim, I think that sounds great. I think that'd be awesome, actually. That could work. It's on April 8th. That's coming up pretty quick. I'm going on the Maverick trip in the week after that, down to the BVI. All right, let's go ahead. I'm just going to sell. I want to sell the NQ futures into the close here. You can hold it longer if you want to, but I just wanted to, that was my plan, was just to scalp this. Oh, a full solar eclipse. Okay. Oh, 2024. Okay, awesome. I like that idea, Tim. Let's start planning. Let's shoot me an email. Action in the long scalp. All right, we've got about 18 or so points on NASDAQ futures trade. If you want to try to hold it a little longer, you can. I have to leave right at 3, so I just want to, and I've got plenty of exposure here. With Google, how did LRCX end up? Dave, I do think options expiration plays a large part of it. Wow, LRCX, it was up 20 when we got it, so it's got some room there. Let's see, Google. So my Google target is here. Let me show you. So there's a couple things lining up here. I am looking at weekly H2. It's at 2870. So that's the main target I'm looking at. I think it can go higher, but you don't want to be, bears make money, bulls make money, pigs get slaughtered. Do I like Amazon in the split? When does it split? Usually, if there's a stock split coming up, you want to get it about 3 weeks before. Yeah, Tesla and I aren't getting along right now. Okay, so the play on specifically for the split, is about 3 weeks before. No, quantum sense. I like that on the fly. I like that too. What effect does the JP Morgan collar have? Yeah, well, it doesn't necessarily hold the market in place, but it does cause movement when they roll it. So if you think about it, they're doing like 50 contracts on the SPX. We're talking $15 billion notional. So when they take it off and roll it out, that can drive the S&Ps down 50 points. So that's the main thing. What would be interesting is if we just blow through. So what they do is they buy a put debit spread for protection, and then they sell naked calls to finance it. What could go wrong there? So if the market melts up like this and they're caught short on those short calls, them getting out of it will explode the market higher. So that's potentially in that situation. All right, that's what we got. All right, so I'm not on the mic tomorrow. Of course, I will update on any trades. Like I said, I'm looking at about 2870 on Google. Nice close. Terrible close Google. So we'll cross our fingers and see. It's probably going to 2700 tomorrow. We'll see what it's going to do. All right, guys, gals, everybody have a good one, and then I'll be on the chat tomorrow, and then we'll see what's going down. All right, have a good one.
We're a trading community, trading with our own money. Simple as that. If we enter or exit a trade, you'll know how and why we do it.
They're just doing what they say they do. They'll just help you be a better trader.
While secrets are fun, keeping them doesn't help you learn how to trade.
This is a great place to learn and to become an independent trader on your own.
We're so confident you'll value your time here that we're offering a $7 trial. Go on, give it a shot.